Okay. Good morning, everyone. Good morning. So today we are starting off. We are almost done through with all our Ind ASs. So the standards are complete. So now we start off with our discussions on analysis of financial statements. Okay. So what is there in this particular chapter? What is it that you are expected to do? And how are we going to be tested for this? So till now, whatever you people have studied, whatever we people have discussed over the last 3 to 4 months, it's basically the standards. It's essentially the points mentioned in the standards. How do we do our financial reporting, and how do we present our particular assertions that we make in the financial statements? So those were all the things that we have been discussing over the past 3 to 4 months. And for various categories of assets or liabilities or incomes or expenses, we have seen the nitty-gritties. Okay. So now what happens in your analysis of financial statements is the financial statements are given to you and you are required to analyze them. You are required to analyze them. From what perspective? From the perspective of analysis, from the perspective of giving your inputs, from the perspective of stating whether an accounting standard has been correctly followed or not. So that is the overall perspective that this particular standard aims, that this particular chapter aims at achieving. It is an application of whatever you people have studied so far. It's an application of whatever you people have studied. And that is why this chapter becomes very critical. Okay. That is why this chapter becomes very critical. Okay. So with that, let us look at what do we have in this particular standard. Mm. So we would be going through what are the features or characteristics of good financial statements. What are the best practices in the presentation of notes, accounting policies, disclosures, etc. And we shall look at some of the illustrations that are there. So today and tomorrow we will be running through with this. And additionally, what we have is we have Schedule 3 to the Companies Act 2013. Okay, that is basically Division 2, which deals with the preparation of the financial statements for a company to whom Ind AS is applicable. Okay, so now when we start off with this chapter, what is it is the format and content for the financial statements for companies is required to be in accordance with Schedule 3 to the Companies Act. And further, there are several additional disclosure requirements, both with reference to the balance sheet as well as the statement to the profit and loss. So now, how many of us have been involved in preparation of Ind AS financial statements, or how many of us have gone through this Schedule 3 to the Companies Act, Schedule 3 to the Companies Act, Division 2? How many of us have seen this on a regular basis, or is it something that's totally new for all of us? Yeah? Is it completely new, Jeannie? Have you gone through it? Anybody else? Nobody else has joined. Okay.
सर आपकी आवाज यानी थोड़ी एको कर रही है, गूंज सी रही है.
Is it better now?
Yes, sir.
Okay. Okay. So, Schedule 3 to the Companies Act, have we gone through it before? Or is it the first time that we are reading it? Or is it the first time that we are made aware of it? In your practical experience, आपने कभी किया है Schedule 3 to the Companies Act? Ind AS financials. Okay, so one is Division 2, you are given some general instructions. Okay, you are given some general instructions. So what do they say? Every company to which accounting standards apply, Ind AS apply, shall prepare, that means it's mandatory. Shall का मतलब होता है it's mandatory. Shall prepare its financial statements in accordance with this schedule or with such modifications as may be required under certain circumstances. So that is what the general instructions tell you, that you have to stick to the format prescribed under Division 2 of Schedule 3. Now, where compliance with the requirements of the Act, including Ind AS, as applicable to the companies, require any change in the treatment or disclosure, including addition, amendment, substitution, or deletion in heading or subheading in the financial statements, the same shall be made and the requirements under the schedule shall stand modified accordingly. Okay. So suppose the act wants a particular disclosure. Okay, just for example, suppose trade payables need to be categorized into MSME and non-MSME. So if this becomes a statutory requirement, it is not there in the Schedule 3 that is already existing, but you can put it as a separate subheading, a separate categorization, and do the disclosure so that you can give in the data that is required. You don't need Schedule 3 to come out with a separate notification for that. They have said that whatever statutory requirements or Ind AS requirements are there, you will continue to follow that. And to that extent, you consider that you have complied with Schedule 3 or that Schedule 3 has been modified accordingly. So that is the first part. Disclosure requirements specified in this schedule are in addition to. That means whatever is required to be disclosed in Schedule 3 is in addition to what is specified in the Ind AS. So Ind AS, we have seen it has, each standard has its own set of disclosures. So that you have to do. In addition, whatever Schedule 3 requires, that is what you have to disclose. So you have two sets of disclosures. Additional disclosures specified in the Ind AS shall be made in the notes or by way of additional statement or statements unless required to be disclosed on the face of the financial statements. All right. So that is as far as you have your notes. Okay. Now, notes shall contain information in addition to that presented in the financial statements and shall provide, where required, narrative description or disaggregation of items recognized, information about items that do not qualify for recognition, each item on the face of the balance sheet, changes in equity and P&L shall be cross-referenced to any related information in the notes. That we are all aware of. Okay. Now, what about rounding of requirements? What about rounding of requirements? Depending on total income of the company. It's not talking about revenue, it's talking about total income. If your total income is less than 100 crore rupees, less than 100 crores, then you can round it off to the nearest hundreds, thousands, lakhs, millions, or decimals thereof. So rounding off is mandatory. Even though you are having financial statements where the revenue is say 10 lakhs or 1 crore, you cannot present the complete financials. You cannot present the total numbers. You have to do a rounding off. Of course, those companies may not even have moved into Ind AS, but if they have done a voluntary adoption, you have to ensure rounding off happens. If it is 100 crore rupees or more, that means your total income is 100 crores and above, then rounding off will be to the nearest lakhs, millions, crores, or decimals thereof. So what they want to do is they want to ensure that your financial statements become easily readable to the people. It becomes easily readable to the people. Once a unit of measurement is used, it shall be used uniformly in the financial statements. So when you are rounding off, say, to the nearest lakhs, then in the financial statements everywhere you will be expressing it in lakhs, except certain items. For example, EPS. So always when you read the financial statements, you will see that all notes, all figures in the financial statements are presented in rupees in lakhs or rupees in millions, except were mentioned specifically, or they will say except in the case of EPS. Okay, so it depends on how they give the disclosure. Okay, but you have to ensure that it is uniformly across the financial statements. Balance sheet, P&L, cash flow, notes, statement of changes in equity, everywhere the same rounding off mechanism shall be used. Financial statements shall contain the corresponding amounts for the immediately preceding reporting periods for all items shown in the financial statements, obviously, comparatives, except in the case of first financial statements laid before the company after incorporation, which is but obvious. You shall disclose all material items in that is the items if they could individually or collectively influence the economic decisions that users make on the basis of financial statements. So materiality depends on the size or nature of the item. So if you remember, size is of course a judgmental feature. Okay, size is of course judgmental. You look at your revenues and then you see to what extent you can combine items in your P&L. Okay, so you can say any items, all expenses below 1% of revenue, for instance, you will combine and present it as other expenses. Does not make sense to disaggregate it and then present them individually. Line items will be manifold. But some cases they say you will also look at the nature. So we studied in Ind AS 24 all related parties transactions by default need to be disclosed. You will not look at materiality. Do you remember this? Yes? Aapko yaad hai?
Yes, sir.
Yes. So all related party transactions, whether it is 1 rupee, 100 rupees, 1 lakh, 1 crore, 10 crores, whatever be the limit, you have to disclose. You have to disclose the arrangement that you have with related parties. Materiality is not a criteria that applies to related party transactions. So one is of course the size, the other is the specified nature. All right. Now, financial statements, okay. For the purpose of this schedule, the terms used herein have the same meanings assigned to them in the Ind AS, obviously. So where any act or regulation requires specific disclosure to be made, the said disclosure shall be made in addition to those required under this particular schedule. So you are going to do the disclosure required under this particular schedule, whatever is required in that particular regulation. So they are looking for a harmonious construction. They are looking for more of a harmonious construction. All right. The schedule sets out the minimum requirements for the balance sheet, statement of changes in equity, P&L, etc., as well as the notes. Cash flow shall be prepared in line with the requirement of the relevant standard. Subtotals, etc., you shall present in addition or substitution on the face of the financial statements when it is relevant to an understanding or to cater to industry or sector specific disclosures. Okay. So that is the general instructions that we have for the preparation of your financial statements. Now, when we look at your balance sheet, this is how the balance sheet looks like. It starts off with assets, then it moves on to equity and liabilities. The division, the format that dealt with for non-Ind AS compliant companies, that is the ICAP regime, it starts off with equity and liabilities and moves on to assets. So now it's the reverse. We start off with assets. So under assets, you are having property, plant, and equipment. You will be having capital work in progress, investment property, goodwill, other intangible assets under development, biological assets other than bearer plants. Bearer plants, where do you show? What are bearer plants? What are bearer plants?
Sir, like trees which bear some fruits.
Fruits. Just say you have a mango orchard. So the mango orchard bears mangoes, right? So that becomes a bearer plant. If you look at the definition of property, plant, and equipment, bearer plants goes and sits in property, plant, and equipment. You recollect Ind AS 16?
Yes, sir.
Yes.
Sir,
So Ind AS 16 में property, plant, and equipment includes bearer plants. It includes bearer plants. So that is why when we talk about biological assets, this is other than bearer plants. So like for example, you have a poultry farm, you have a dairy farm, for example. So these are all biological assets, right? Where they are living assets that you are owning for the purpose of furtherance of your business. So they will be disclosed separately, but bearer plants goes and sits in your property, plant, and equipment. Okay. Next, financial assets, investments, trade receivables, and loans. Deferred tax assets, net. Net means net with deferred tax liabilities. Net with deferred tax liabilities. Other non-current assets. Other non-current. Okay. You will have a similar presentation even for consolidated financial statements. Okay, so this does not quite distinguish. Okay, so that is why you have your goodwill that is present here. Goodwill arises at the point of acquisition. Okay, typically you have goodwill arising at the point of acquisition. So of course there is a very major discussion that is happening, that why do we need to recognize goodwill? Why are we prepaying? Okay, see, accountants have, or rather businesses have, this particular uh, tendency not to record anything in the P&L that adversely affects the results. But why should it affect us as accountants? When I am acquiring a business by paying more, why do you call it as goodwill? Why can't it go to the P&L straight away? What is the benefit I'm getting if I show it as goodwill? That is one of the major discussions which is underway at the International Accounting Standards Board. We have a lot of ambiguities that exist in Ind AS. Okay, another ambiguity. You people have studied Ind AS 116, right?
yes, sir.
Yes, sir.
So Ind AS 116 mein the biggest ambiguity is what I, who takes the asset on lease, what I account in my books and what the counterparty records in its books. The one who gives the asset, the lessor and lessee, what they account in each other's books is totally different. That means the balances in the books of the lessor and the lessee do not match. I may be regarding it as an ROU asset, but do you think the counterparty shows it as a sale of an asset? No. For all that I may know, he will continue to treat it as an income related lease. He will not show ROU as. If I record a lease liability, is he showing a lease asset? No, not necessary. He can show it as a lease income for him. But I have to show a lease liability because I have taken a contract to use an asset in the manner I want. So there, obviously, the balances will not cross tally against each other. So there are a lot of ambiguities which we see in our Ind AS. And for that, we always have continuous discussions that keep on happening to improvise this particular discussion. Okay. All right. So that is your assets. Deferred tax assets net. What do you mean by net?
Net of liabilities, deferred tax
Net of deferred tax liabilities. Net of deferred tax liabilities. Acha. Suppose I am consolidating. I have in one subsidiary a deferred tax asset, in another subsidiary a deferred tax liability. Can I net it off?
No.
Why?
Substance, sir. It relates to two different entities.
It relates to two different entities. If particularly this becomes critical if you are dealing with an overseas subsidiary. Overseas subsidiaries, the taxes cannot be, the deferred tax assets and liabilities cannot be set off against each other. So you will end up disclosing it separately. Okay. When we talk about current assets, you have your inventories, financial assets, again, investments, trade receivables, cash and cash equivalents. bank balances other than 3 above, okay, loans, others to be specified, current tax assets and net, current tax assets and net, other current assets and total assets. So that gives you your total assets. Coming to equity and liabilities, you have equity share capital and other equity. Fairly simple. Liabilities, you have financial liabilities. In that you have borrowings, lease liabilities, trade payables. Trade payables categorized into micro and small enterprises and other than micro and small enterprises. Other financial assets, liabilities other than those specified in item B to be specified, you can show as the residual criteria. Provisions, DTL, and other non-current liabilities. Current liabilities, again, financial liabilities, whatever becomes due within 12 months will be disclosed here. Total outstanding trade payables, again, it will go into micro and small and other than micro and small. Others, provisions, current tax liabilities, and total equity and liabilities. So this is your overall format that you have for your balance sheet Okay. Now, when you look at your changes in equity, you will obviously present it opening balance, whatever change is there due to prior period errors, what is the restated balance, changes in equity capital during the current year, balance at the end of the current reporting period. So you need to do this for the current year as well as for the previous reporting period. This is your changes in equity. Okay. Other equity, these are the broad categories that you are having. Of course, you have the freedom to add any additional reserve that you want. You may be having an investment allowance reserve. You may be having certain reserve required under any particular statute. So that is, those reserves can come in as a separate line item. Okay. So what are you having? You are having your categories of reserves coming on the headers. Share application, money pending allotment, equity component of compound financial instruments. Reserves and surplus, you have capital reserve, securities premium, others, retained earnings. Debt instruments through OCI, equity instruments through OCI. You take all these movements, you remember?
Yes,
Achha.
sir.
Financial instruments में investment in equity, you measure it at what value? I'm not invested in a subsidiary or an associate or a joint venture. It's a pure investment in equity instruments. Do you carry that investment at cost or do you carry it at fair value?
Cost.
Fair value. Investments in equity will always be reported at fair value unless it is subsidiary, joint venture, associate, where you have an option to carry it at cost.
Yes,
समझ में आ
yes.
गया? Yes.
Yes, sir.
The whole point is the intent. You will invest in subsidiary or joint venture or an associate to do business, not to trade and gain the benefits from them. So therefore, that can be carried at cost. But the other equity is purely to generate money. So you can go in, you will have to go in for fair value. You will have to go in for fair value. Achha, fair value, the fluctuations that you have, the amount that you invest versus the fair value, things will not be the same. There will be a difference. So that difference kahan pe leke jaoge? Where will you take that difference? To the P&L or to the OCI?
OCI.
You can take it to the P&L. You can take it to the P&L, but there is an irrevocable option to take it through other comprehensive income also. Do you recollect this?
Yes, sir.
Yes. Do you recollect? ये आपने पढ़ा होगा at the time of business model evaluation for the purposes of determining how do I record my financial instruments. Amortized cost for certain debt instruments where you are holding till maturity. Or you can go ahead if you are holding till maturity and a sale, if the prices are right, then you can take it through the P&L. This is for debt instruments. Then if you are investing in equity, you can go for the fair value through P&L, which is by default. Or if you say, I do not want the volatility to affect my P&L because this is something not in my control. So then the standard has given a one-time irrevocable option for taking it through the other comprehensive income. So when you take it through other comprehensive income, that movement that happens goes to other comprehensive income, and it is a non-reclassifiable item. You remember reclassifiable, non-reclassifiable OCI? Yes.
Yes, sir.
We
Yes, sir.
did foreign currency translation reserve, that becomes a reclassifiable
Reclassified.
item. When you dispose your investment in foreign subsidiary, that gets reclassified into the P&L.
PN.
But at the same time, your movement in fair values of equity instruments is irrevocable. So from OCI, it moves directly to the retained
Retained.
earnings. As part of, we can create a separate reserve known as fair value reserve. We can create a separate reserve known as fair value reserve. So that is what is your equity instruments through other comprehensive income. Debt instruments through OCI is basically when you have a business model that is holding till maturity or sale. It depends. In certain banks, you have this categorization. They hold it till maturity for getting your principal and interest. But if the price is right, they don't mind selling it off if they need certain liquidity at some point of time. So when you have such criteria, that also goes through your other comprehensive income. Then you have your effective portion of cash flow hedges. आपने पढ़ा होगा, okay? Revaluation surplus, exchange differences on translating the financial statements of a foreign operation. This is what we have done in days 21. ये याद होना चाहिए आपको, right?
FCTR.
Other items of other comprehensive income. So whatever you have, other items of OCI will come here. Money received against share capital to give you the total. So how am I going to do that? Opening balance, whatever prior period errors or what you can say, omission or change in accounting policy, that impact to give you the restated opening balance. Total comprehensive income for the year, dividends, transfer to retained earnings, everything, any other change to give you the closing balance. So this is for the current reporting period, and you need to do a similar activity, a similar tabulation for the previous reporting period as well. Okay. Now, remeasurement of defined benefit plans. You remember in DS 19, we had seen changes in actuarial assumptions. याद है आपको?
Yes.
Yes, sir.
याद है?
Yes, sir. In days 19.
हाँ, in DS 19 में हमने वो लिमिटेड वाला क्वेश्चन किया था जिसमें actuarial assumptions changed. We did a question on that. Okay, so that is we took the salary increment जो 1 crore tha, we took it to 1.5 crore and then we did the working. Okay, so in that situation, remeasurement of defined benefit plans and fair value changes relating to own credit risk of financial liabilities shall be recognized as a part of retained earnings along with separate disclosures, or shall be shown as a separate column under reserves and surplus. Normally, I would suggest to show it as a separate column because that categorization can be identified back to where it is coming from. Okay, all right. Now, general instructions for preparation of the balance sheet. Current assets, how are you going to current assets or current liabilities? The classification current, what determines it? Expects to realize the asset or sell or consume the asset in its normal operating cycle, or holds the asset for the purpose of trading, that's inventory in nature, expects to realize the asset within 12 months after the reporting period, or it is a cash or a cash equivalent unless the asset is restricted from being exchanged or used to settle a liability for at least 12 months after the reporting period. For at least 12 months after the reporting period. An entity shall classify all other assets as non-current. So either you follow a working capital cycle based approach for categorization as current or non-current, or you treat it as 12 months as the horizon, and based on that, anything you expect to realize after 12 months goes and sits under non-current. Are we able to understand?
Yes, sir.
Yes, ठीक है. Okay. The operating cycle of an entity is the time between acquisition of assets for processing and their realization in cash or cash equivalents. I think this you would be fairly aware of. Okay. Starting from procurement of inventory, conversion into finished goods, sale, realization of cash. So that is your entire working capital cycle. That becomes your entire working capital cycle. Are we okay with this? Yes.
Yes, sir.
An entity shall classify a liability as current, similar like an asset. Expects to settle the liability with operating cycle, holds the liability primarily for the purpose of trading. This is more from your perspective of financial instruments chapter. Liability due to be settled within 12 months after the reporting period, or it does not have an unconditional right to defer the settlement of the liability for at least 12 months after the reporting period. Terms of a liability that could, at the option of the counterparty, result in its settlement by issue of equity instruments do not affect its classification. So, for example, you have issued convertible debentures convertible at the option of the holder. So, this becomes terms of liability that could get converted into equity. So that those terms do not affect the classification of a liability. Remaining all liabilities classify as non-current. Classify as non-current. A receivable shall be classified as trade receivable if it is in respect of the amount due on account of goods sold or services rendered in the normal course of business, or services rendered in the normal course of business. Okay. So tell me one thing. Uh, trade receivable. Trade receivable. Why do we call an item as trade receivable? Or what is the only criteria that identifies a trade receivable from any other asset that is there in your balance sheet? What is the differentiation, the differentiating factor? See, when I have a trade receivable in my books, it means that only passage of time is necessary for the trade receivable to be converted into money terms. Are we able to understand?
Yes,
Yes.
sir.
Yes, sir.
There should be only a passage of time involved, nothing else. You are not supposed to do anything else to realize this money. Time बीत गया, पैसा आ जाना चाहिए. That is the meaning of trade receivable. Okay. If you have certain other activities to perform to collect that money, then you cannot strictly call it as a receivable arising out of a sale transaction, because it means that you have not fulfilled all your performance obligation. And therefore, it means that whether you have correctly recognized the revenue or not is a question that arises. Okay. So that is your trade receivable. Payable shall be classified as a trade payable if it is in respect of the amount due on account of goods purchased or services received in the normal course of business. In the normal course of business. Company shall disclose the following in the notes. Non-current assets, property, plant, equipment, classification given as land, buildings, plant and equipment, furniture and fixtures, vehicles, office equipment, bearer plants, and other. Others, you shall specify the nature, disclose assets under lease specified separately under each class of assets, reconciliation of the gross and the net carrying amounts. You remember that table that we prepare? Gross block, that is opening plus additions minus deletions to give you the closing. Accumulated depreciation, opening balance, add charge for the year, less disposed during the year to give you the closing balance. And net block, you have current year, previous year. So that kind of a table is something that we will have to prepare. Okay. Amount of changes due to revaluation, acquisitions through business combinations, Additions, disposals, you will show separately. Amount of change due to revaluation if change is 10% or more, and other adjustments and related depreciation and impairment losses or reversals shall be disclosed separately. Shall be disclosed separately. Okay. So that takes care of the first part, that is your assets. Investment property, you can go through. You will have to give a reconciliation of same like how we do for assets. Goodwill, a reconciliation of the gross and net carrying amount at the beginning and end, showing additions to goodwill, impairment, disposals, and other adjustments. Other intangible assets, these are the way you will classify it. You will classify it. Okay, same treatments. Okay, biological assets other than their plants, same thing. When we come to investments, categorize as investment in equity instruments, preference shares, government securities, debentures or bonds, mutual funds, partnership, or other investments. And then you shall give these disclosures of the names of the body corporates that are subsidiaries, associates, joint ventures, or structured entities. Okay, all right. When we look at trade receivables, this is something you people have already gone through. Classify it as considered good, secured, considered good, unsecured, significant increase in credit risk, and credit impaired trade receivables. This is your Ind AS 109 disclosure requirements. Allowance for bad and doubtful debts, you will disclose it separately under the relevant heads. So you will disclose this one by one. Debts due by directors or other officers of the company or any of them, either severally or jointly with any other person, or debts due by firms or private companies, in which any director is a partner or a director or a member, shall be separately stated. Why? Because debts due from directors or officers is not something that happens routinely. So you need to disclose that separately. For trade receivables aging, this is how you are going to give it. Less than 6 months to 1 year, 1 to 2 years, 2 to 3 years, more than 3 years. So that is your aging that you will have to disclose. Unbilled dues shall be disclosed separately. Unbilled dues. Okay. You have performed the obligation. You have not raised an invoice. Okay. So it becomes an unbilled revenue. So unbilled revenue and unbilled dues you will disclose separately. These are the categorizations for loans and advances given, what you will be disclosing. Okay. You can go through these items as homework. Okay. Current assets, categorization of inventories, investments, okay. Trade receivables, again similar disclosures, okay. All right. Next, you come to cash and cash equivalents. You will categorize it as balances with banks, checks or drafts on hand, cash on hand, and others. This is what you are going to give the disclosure. Loans, other financial assets, other current assets. Okay, so that is what you are going to do. Other current assets, you shall show it as advances other than capital advances, classified as security deposits to related parties, other advances, advances to directors or any other officers of the company, or any of them severally or jointly with any other person, or advances to firms or private companies in which the director is a partner or a director or a member, should be separately stated. So whatever you have intercompany amounts, you will show them separately. Earmarked balances with banks to be separately stated, because this is not something which you can utilize. Balances with banks to the extent held as margin money or security against the borrowing shall be disclosed separately. Repatriation restrictions to be separately stated if this is not a foreign subsidiary. Okay. Equity capital, you can go through the disclosures. Promoters holding more than a specified percentage, you will disclose their contribution separately. Other equity, you are having the details. Okay, you are having the details, what all needs to be disclosed. Non-current liabilities, you can go through all these parts for homework. Okay, just PUD law out of curiosity. Okay, just go through this because much of it is what you would already be knowing of. For me, if I take it, it will only be a repetition. Okay, can you go through this for homework?
Yes, sir.
You Padlo, you don't have to by heart it. Okay, you don't have to by heart this. Okay, all right. Now, regulatory information and all you would have prepared at some point of time. So I'm just leaving these particular categories for homework. Benami properties held, property not in the name of the entity. All these things you will mention separately. Okay, so that takes care of your disclosures. Certain ratios are there. Then those ratios you will have to disclose. Compliance with approved scheme of arrangements, borrowed funds, where a company has received any fund from any persons. Okay, so this is all what you will have to disclose. Okay, so that takes care of your balance sheet. Can you go through these whatever I told you for your clarity? Just go through it from the perspective of disclosures, just to understand what all things are there. Of course, you will not be tested on these particular, what you can say, on these particular items as a direct question. Like they will not say give the disclosure criteria for trade receivables. They will give you a question. In that, you have to disclose in line with what is there in these notes, in line with what is there in this particular part of your chapter. Okay. Coming to statement of profit or loss. Revenue from operations, other income to give you total income. This is the total income that becomes the basis for rounding off basis. Okay, next. Expenses, cost of materials consumed, stock in trade, changes in inventories, employee benefits, finance cost, depreciation, other expenses, total expenses. So that gives you P&L before exceptional items. Exceptional items to give you P&L after exceptional items before tax. So then you give the tax expense P&L for the period from continuing operations, then P&L from discontinued operations, to giving adjusted for tax to give you the net P&L from the discontinued operations. So for the period will be continuing plus discontinuing. Other comprehensive income, we will categorize it into items that are not reclassifiable, items that will not be reclassified to the P&L, income tax, items that will be reclassified to P&L, and income tax relating to items that are reclassified to P&L. So that is something you will disclose. Total comprehensive income, EPS per equity share, basic and diluted, EPS per equity share for discontinued operations, EPS per equity share for continuing and discontinuing put together. Are we able to kind of, have you worked on this? Have you worked on this format?
Yes, sir, relating to that EPS calculation and abstract.
Yes. Okay. So I hope you have worked on this. Okay. And then you can go through these disclosure requirements. Okay. For consolidation, they have certain additional disclosures. Bus वो disclosures कर लेना. So that's just for your understanding. Okay. So with that, that closes the schedule 3. That closes the schedule 3. Okay. All right. Is it okay till now?
Yes, sir.
ठीक
Yes,
है,
sir.
काफी थियरी है, not much practical. We'll come to the questions. Okay, now what do you mean by good financial statements? Okay, so good financial statements have certain features. What are those features? Give a true and fair view of the financial statements. So that is the first one. Relevance. How relevant are your financials? Understandability. For the user to make sense, the financial statement should be readable and content should be lucid to digest. Consistency, regulatory compliance, universality. These are the 6 features that they should have. Consistent from period on period in standard formats. Understandability, the statements should make sense. How they make sense to everybody, I also don't know, because there are so many things which even it does not make sense the first time when we read it as finance professionals. Okay. But they want it to be understandable. So they say even a layman should be able to read the same and understand the basic information, if not the accounting policies and procedures. Okay. That is something which they have to ensure. Regulatory compliance, the tax authorities, market regulators, etc., rely hugely on the financial statements and gauge the compliance met by the enterprise. Universality, comparable both within the industry as well as outside the industry. So these are the features that you have. Is it okay? Yes?
Yes, sir.
Just a minute. Just give me a minute. Now, coming to best practices that applies to all companies. Again, this is something you would already be knowing. Compliance with the requirements is a must, that is there. Comply with the standards and the regulations, but also ensure your financial statements are an effective part of your wider communication with your stakeholders. This is particularly gaining information because now we have an entity that is hounding all of us, right? The NFRA, which is very, very active on the regulatory front. Yes, it is zeroing in on the audit firms also. It is zeroing in on the companies also and identifying where there are non-compliances. And then it points out those specific uh, cases where they have not complied. And then it sends out penalties. Before that, it gives a show cause notice, conducts hearings, issues penalty orders, collects the penalty, and if it is serious, then it can also enter into actions like debarment from practice for a couple of years or whatever is there. Okay, debarment from audit or whatever is there. Okay, so my advice, read one or two NFRA orders just out of curiosity. Just out of curiosity. The threshold for NFRA is essentially your Ind-AS companies. Okay, they go only for the very large companies. Okay, so they will all have Ind-AS implications. So what I want you to do is, out of curiosity, you can run through certain NFRA orders on the preparation of financial statement side. You need not go through the audit quality reviews. That's not required at this stage for this particular topic. You can go through the non-compliance with financial statement preparation. That is something you can go through and then work it out. Okay, all right. Next. First is compliance. Second is completeness. Information disclosed should be complete, should not lead to any cross-questioning in the minds of the users. So many times you would have seen that an accounting policy stating balances of debtors, creditors, etc. are subject to reconciliation and confirmation gives impression कि किसी ने इन पे काम किया ही नहीं है. Nobody has done the work on this because this is questioning the completeness of that particular transaction, of that particular set of balances. So therefore, you cannot give such statements. Simple and specific. Draft your notes, accounting policies, commentary on more complex areas in simple and plain English. English तो आप plain डाल सकते हो. But problem is that the standards themselves are complicated. So how are you going to do that in plain English? At the most, what we do is we take whatever are the policies that we follow and we put that in our financial statements. Okay, try to keep it as simple as possible. Policies should be clear and specific, no vague or ambiguous notes, reduce generic disclosures, and focus on company specific disclosure. So that is something you can go through these examples. Transparency, whatever assumptions you have made, whatever basis you have taken, please disclose them. Please disclose them. Okay. All right. Materiality, you will have to see that you disclose the material requirements. Do not overload your financial statements with disclosures. It's not required. It's not required. Capital commitments, new revenue stream के examples देख लो. Integration of notes. Your financial statements comprise of balance sheet, P&L, cash flow statement, statement of changes in equity. These four things are 4 pages. These 4 things are 3.5 to 4 pages. Your financials run into at least 60 to 70, sometimes even 90 to 100 pages. That means the bulk is your notes. The bulk is your notes. It is the largest portion in the financial statements. They give the greatest impact on the effectiveness of your financial statements. Group notes into categories, place the most critical information more prominently or a combination of both. Integrate your main note of a line item with its accounting policy and any relevant key estimates and judgments. Okay. All right. Material accounting policies shall be disclosed. Remove non-material disclosures that do not add any value. Disclosures should be relevant and specific to your companies. Help your investors understand your financial statement. That is the purpose of disclosures. Use judgment to determine whether your accounting policies are material, considering not only materiality of the balances, but also the nature of the company's operations. So that is how you will categorize into material or non-material. Next, key estimates and judgments. And then we are following currently an integrated approach, jahan pe we not only disclose the financial results, but we also integrate it with our management discussions, right? आपने पढ़ा होगा वो जो annual report का जो presentation होता है या फिर what is uploaded on the entity's annual report, that includes management commentary about governance, strategy, and business developments, CSR reporting, business responsibility reporting, sustainability reporting, etc., etc. So all these things put together becomes your annual report. All these things put together becomes your annual report. So that is what is the whole thing. That is what is the whole thing. So that is why, if you remember, there is one standard on audit that deals with other items in the financial statements. Are you aware of it? Yes. याद है अपने को SA 720? Jeannie?
Yes, sir. Yes, sir.
SA 720, auditors' responsibilities relating to other information. What is expected? Other information matlab what is disclosed along with the financial statements. What is expected is the auditor should go through that and ensure that whatever is disclosed is not in deviation to the financial information that is being presented. Okay. Integrated approach. That is why we call that it is an integrated approach. Overall communication, consider the annual report as a whole and deliver a consistent and coherent message throughout. Acknowledges that one may present a financial review that describes and explains the main features of the performance and financial position, uncertainties, etc. Look outside, such as environmental reports and value-added statements, particularly in industries in which environmental factors are significant when employees are regarded as an important user group. Even though the reports and statements presented outside the financial statements are outside the scope of AS or Ind AS, they are not out of the scope of regulation. Matlab, somebody is there on top of your head to monitor whatever disclosures you are making. Okay. All right. So that gives you an overall understanding of how my financial statements should be. Any doubts here?
No, sir.
All clear? Yes. Hope it's all clear. All right. So now we move on to the next one. That is, now we come to the set of questions. Okay. बहुत theory हो गया. I think this is probably the first session where we have gone into so much of theory. Otherwise, by now we would at least have done 2 to 3 questions, or we would have discussed examples based on what I had to offer. Okay. Now we come on to the case studies. Acha. Now what happens in these case studies is we'll understand the format of the case study. Okay, all the case studies that come is they give you a scenario. They give you a very detailed case description. Okay, they give a very detailed case description. Okay, typically this case description will involve an accountant. Okay, it will involve an accountant who is presented with a business case. Who is presented with a business case? Accountant prepares financial statements based on certain criteria. Whatever he understands. Now, what you have to do is you have to identify whether those criteria are what is required under Ind AS or what is not required under Ind AS. And you have to very emphatically state that it's not as per Ind AS. You have to do it like this and then give the items that are there under Ind AS and then give the revised workings. Give the revised workings. Is it okay? So that is what you are expected to do. It is like saying you have gone in as an auditor, you are presented with something and then you have audited and you come to know it's not as per the Ind AS. So you will end up giving your opinion on that and how it can be rectified. That is something that you have to do. Okay. Now let us come on to the case studies. Okay. On 1st April, Star Limited has advanced a housing loan of 15 lakhs to one of its employees at an interest rate of 6% per annum, repayable in 5 equal annual installments along with interest at each year end. Employee is not required to give any specific performance against this benefit. Market rate of a similar loan for housing financed by banks is 10% per annum. Okay. Accountant of the company has recognized the staff loan in the balance sheet equivalent to the amount of housing loan disbursed. That is 15 lakhs. The interest income for the year is recognized at the contracted rate in the statement of P&L by the company, that is at 90,000, which is 15 lakhs into 6%. Analyze whether this treatment is in compliance with the relevant Ind AS. If not, advise the correct treatment of housing loan, interest and other expenses in the financial statements of Star Limited for the year X1, X2, along with workings and applicable Ind AS, and also show how the housing loan shall be reflected in the Ind AS compliant balance sheet as on 31st March 20X2. Did you understand the question?
Yes, sir.
यहाँ पे क्या हो रहा है? Loan is given to an employee. Is it at market rate or concessional rate?
Concessional rate.
तो concessional rate में अगर आपने दिया होगा तो what is the requirement? You are going to get this money back. So is it a financial asset?
It's a financial asset and 109 will be applicable.
Yes. तो 109 अगर applicable होगा तो initial recognition should be at which value?
Present value of that benefit will be segregated.
Yes. That means basically you will do the moment you enter into such transactions, it should be recorded at fair value. For
Value
the fair valuation, what is the rate of interest that you will consider? 6% or 10%?
10% effective interest.
Yes, because 10% is your market rate of interest. Yes. Are you able to understand?
Yes, sir.
Jimmy? Yes.
Yes,
All
sir.
right. So इन्होंने क्या किया? 15 lakhs लिया, 6% rate of interest, 90,000. Is it right as per Ind AS?
No.
No, वो ठीक नहीं है. That is right as per accounting standards. वो accountant ने बोला I have given him 15 lakhs. I am collecting interest at 6%, so I will recognize an income of 6%. वो वैसा होगा नहीं. It does not happen like that. Okay. So that is something that you are going to have as part of your solution, as part of your solution. So you have to tell that they are not complied with Ind AS 109 requirements. You have to give those requirements. Now, if I have to do this presentation, how will I do? How will I calculate this particular requirement? Right? How will I calculate? Follow?
सर 10% डिस्काउंटिंग फैक्टर लेकर हम उसकी प्रेजेंट वैल्यू निकालेंगे और वो प्रेजेंट वैल्यू पे हम लोन टू एम्प्लॉय दिखाएंगे और जो बैलेंस अमाउंट रहेंगे वो प्रीपेड एम्प्लॉय कॉस्ट बताएंगे.
That's
एंड
right.
अनडिस्काउंटिंग होगा और प्रोपोर्शनेट प्रीपेड एम्प्लॉय में से बेनिफिट कॉस्ट में हर बार पीएनएल में जाएगा एवरी ईयर.
Amortize करो. That's right. So I think Jeannie, did you follow?
Yes, sir.
So this is something you have done probably in your Ind AS
Ind AS
109.
109. Yes, sir.
हाँ, आपने पढ़ा होगा transactions not at fair value. उस कैटेगरी में ये एक common adjustment था. Okay. So I will not run through the calculations. That's something you would already be aware of. So every year he is paying the principal also and the interest also. So 15 lakhs. So principal of 3 lakhs will be paid. Interest of 90,000. Total 3 lakh 90. So discounting factor at 10% to give you the present value. So 12 minus 3 you will pay 72, 3 lakh 72.82, 0.826. So like this you will go on doing to arrive at the fair value of the loan. To arrive at the fair value of the loan. The difference between the amount paid 15 lakhs and 13 lakh 54,602. कितना है ये? 1,45,390. This difference, as she rightly said, it goes to
प्रीपेड एम्प्लॉय कॉस्ट.
prepaid employee benefits, and you will amortize it over the tenure of the loan. You will amortize it over the tenure of the loan. Okay, on a straight line basis. Okay, all right. Then you will work back. You will work the amortization of the loan. So 13 lakh 54 ends up becoming zero. Ends up becoming zero after considering repayment of principal, interest, etc. It becomes zero. Okay. Next. Journal entries to be recognized. March 20x2. When you get the money, where are you going to record it? Okay. Employee benefit cost to prepaid employee. That is the write-off that you will be doing, amortization. And how will the housing loan balances appear in the financial statements? Financial asset, loans to employees, other non-current assets, financial asset, loan to employee, which is due within the next 1 year, so current, and prepaid employee cost within the next 1 year. Deferred tax on temporary differences should be recognized. In absence of any tax rate, no deferred tax has been recognized. Are we able to follow?
Yes, sir.
Yes. Are we able to follow? All right. Okay. What I want you to do is go through case study 2 question. Don't look at the answer. Okay. Go through with the question and tell me वो जो कर रहे हैं वो सही है या नहीं. Just go through this. Okay, let's see. Go through this question.
नो सर।
अच्छा, आपने क्वेश्चन पढ़ लिया.
सर स्टार्टिंग में देखा, मतलब हेल्प और सेल बता रहे हैं, बस स्टार्टिंग पोर्शन में बताया कि वो इन फ्यूचर उसको यूज करने वाले हैं।
Okay, okay, all
दैट
right.
मीन्स intention is not to sell, then why would they classified as help for sale?
Yes. So Pluto has purchased a manufacturing plant for 6 lakhs. Useful life is 10 years. On 30th September, Pluto temporarily stops using the manufacturing plant because demand has declined. However, the plant is maintained in a workable condition and it will be used in the future when the demand picks up. The accountant of Pluto decided to treat the plant as held for sale until the demand picks up and accordingly measures the plant at lower of carrying amount and fair value less cost to sell. Also, the accountant has also stopped charging the depreciation for the rest of the period, considering the plant as held for sale. The fair value less cost to sell on 30th September X3, 31st March X4 was 4 lakhs and 3.5 lakhs respectively. So what the accountant has done is he has taken 6 lakhs as the cost purchase price, which is correct. He has taken accumulated depreciation only for 2.5 years. Only for 2.5 years. Okay. अच्छा, तो 2.5 years उसने लिया. So 6 lakhs divided by 10 into 2.5, 1,50,000. So that comes to 4,50,000. Fair value less cost to sell 4 lakhs. So value will be lower of the two. So that comes to 4 lakhs. So balance sheet extracts other current assets, assets classified as held for sale, 3,50,000. Analyze whether the above accounting treatment is in compliance with the Ind AS. If not, advise the correct treatment along with the necessary workings. Okay. So what all are you going to do? You first tell me आप क्या क्या कर सकते हो इस क्वेश्चन में.
सर फर्स्ट ऑफ ऑल इसको हेल्प फॉर सेल क्लासिफिकेशन तो नहीं करेंगे, इसलिए इनका डेप्रिसिएशन भी सीज नहीं होगा.
Yes.
फुल का डेप्रिसिएशन लेंगे और इम्पेयरमेंट चेक करेंगे सर.
Yes, you are given fair value less cost to sell on 31st March 20x4 also. ठीक है, जिनी, मोनिका, या जिनी.
यस सर, एक्चुअली मैं जब भी क्लिक करती हूँ अनम्यूट पर तो वो बार बार यानी मेरा बंद हो जाता है, इसीलिए मैं जवाब नहीं दे पाती थी.
Okay, 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 okay. So system is making you keep quiet. All right, fine.
पता
ठीक
नहीं
है.
पेन हो जाता है फिर एकदम से बंद हो जाता है.
Okay, okay. So basically what is happening is you are given not only the data as at 30th September X3, you are also given the data on 31st March X4. See, you need to give a holistic answer. We cannot stop at saying that what the accountant has done is incorrect. That is the first reaction. That is correct, what you are telling. But you cannot stop it at that point of time. You have to expand your solution. Because this question will come for something like 8 marks. 8 marks may, if you only tell that, look, this is not an asset held for sale, this is in workable condition, you have to treat it as an asset that is going to be held for use, and therefore you will not categorize it as held for sale. You will charge depreciation for the full year and not for only 6 months. And then you cannot stop it at that point of time. This solution will fetch you maybe out of 8, it will fetch you 4 months. The remaining 4 months. So we need to understand where is this question coming from. When they have given you fair value less cost to sell on 31st March X4 also, That means the period after this held for sale event has happened. It means they are asking you to check for an impairment. You remember recoverable value in Ind AS 36? Yes.
Yes, sir.
What is recoverable value?
Fair value less cost to sell, or value in use, whichever is higher value.
Whichever is higher.
Higher.
So यहाँ पे you are given fair value less cost to sell. Are you given value in use?
No.
Not
No,
given.
sir.
Data is not given. You can either say data is not given, or you can say that it is zero because currently it's not in use. Currently the asset is not in use, right? They have said that they have put it idle because demand is not. So can I say right now the value in use becomes zero?
Yes, sir.
आप कौन सा भी assumption ले सकते हो. You can take it that data is not given, I can't calculate, or you can say that right now it's idle, so value in use is zero. In both the cases, the recoverable value will be fair value less cost to sell because that's the only data point that you are given. Yes or no?
Yes, sir.
So you will first start off with saying what the accountant has done is not right. This is not an asset held for sale because it is idle only for a temporary period. The asset is pretty much in a workable condition. The asset is pretty much in a workable condition. And the intent of the entity is not to sell it off. The intent of the entity is not to sell it off. Rather, the intent of the entity is to keep it. The intent of the entity is to keep it with itself for the purpose of usage when the demand picks up. So first of all, Ind AS 105 is not applicable in this case. Coming to the next point, you will then have to go to their calculation. So I have an asset worth 6 lakhs. I have purchased it on 1st April X1. I am going till 31st March X4. So 1, 2, 2, 3, 3, 4, 3 years.
Yes.
Useful life is 10 years. So 6 lakhs divided by 10, 60,000 into 3. So your depreciation for the 3 years ended will be 1.8. And that is why your net block will be 4 lakh 20. It will not be 4 lakh 50. Are you okay up till here?
Yes, sir.
Acha. This 4 lakh 20 I will compare with 3.5 lakhs. And then you will say that recoverable value is lower than the book value. We need to have an impairment loss that needs to be recognized. So you have an impairment loss of 70,000. Are we okay with this?
Yes, sir.
Yes. All right. So that is something which you need to categorize in your solution. So if you look at the way the solution is presented, you first define what do you mean by held for sale, where amount will be recovered principally through a sale transaction. And then what is the condition? The sale must be highly probable. The sale must be highly probable. An asset or disposal group cannot be classified as non-current asset held for sale if entity intends to sell it in a distant future. In a distant future. Para 8 of Ind AS 105 states that what are the criteria? I think there are 5 criteria which is prescribed under Ind AS 105. Management must be committed. Active program to locate a buyer and complete the plan should have been initiated. Actively marketed for sale at a price that is reasonable to the current fair value. So this is the third one. In addition, the sale should be expected to qualify for recognition as a completed sale within 1 year from the date of classification. So that is your fourth condition. Are we able to understand, recollect these conditions that you studied in IFRS 5 or Ind AS 105?
Yes, sir.
Yes, ये सब हमने पढ़ा था. ओके, आपने पढ़ा था, मैंने आपके साथ नहीं पढ़ा था. ओके, ऑल राइट. नेक्स्ट, पैरा 13 of Ind AS 105. An entity shall not classify as asset as held for sale an asset that is to be abandoned. This is because its carrying amount will be recovered principally through continuing sale. Okay. Not account for a non-current asset that has been temporarily taken out of use as if it had been abandoned. So you will not treat it like that. So para 55 of Ind AS 16 states that depreciation does not cease when asset becomes idle or is retired from active use. So all these situations clearly specify that what is required in the Ind AS is this, what the entity has done is this. So what the entity has done is not received properly, is not done properly. Are we able to understand?
Yes, sir.
Yes. So you have to mention your arguments in this particular fashion. You need not write the para number. Para number up mat likho. But at least the standard, what is required in that standard, what is not being fulfilled here, all those things you need to highlight. All those things you need to highlight. Okay. Now, we started off with 6 lakhs minus 180, 420 minus 70, 3 lakh 50,000. Okay, so that is your balance sheet extracts. That is your balance sheet extracts. Okay, next 3 lakh 50. Impairment loss of 70,000 is something that you are ending up recognizing. Impairment loss of 70,000. Okay, so that takes care of this. Is it okay? Yes.
Yes, sir.
No doubts, I hope. Okay, all right. Next. Okay. Now, on 5th April 20x2, fire damaged a consignment of inventory at one of Jupiter Limited's warehouse. This inventory was manufactured prior to March X2, costing 8 lakh rupees. Net realizable value was estimated at 9.6. Because of the damage, the company was required to spend additional amount of 2 lakhs on repairing and repackaging the inventory. Inventory. Inventory was sold on 15th May for proceeds of 9 lakhs. The accountant of Jupiter treats this event as an adjusting event and adjusted this event of causing damage in its financial statements and accordingly remeasures the inventories as follows. Cost, NRV, inventories lower at cost or NRV. Analyze whether the accounting treatment made by the accountant is in compliance of the Ind AS. If not, advise the correct treatment along with working for the same. Okay. So now tell me, what has the company done?
Company has taken adjustment to the value of inventory for fire that has been happened on 5th April, which is after the balance sheet date. It should be the non-adjusting event. So the value should be the 8 lakh or the net realizable value 9.60, whichever is less. 8 lakhs पे होना चाहिए था.
That's right. That's right. Now, is this is the conclusion that you have derived. Okay. Even Jeannie would agree with this, right? Monica?
Yes, sir.
Yes. All right. अच्छा, तो ये मेरा adjusting event नहीं है. This is not my adjusting event. Okay. Because the fire has happened after 31st March. Fire अगर 31st March के night में शुरू होके if it was continuing, then you could treat it as an adjusting event. Then you could treat it as an adjusting event. Okay. So in this case, you need to identify two standards, Ind AS 10, Ind AS 2. Events after the reporting date is defined, and then two types of events can be identified. Indicative of conditions that existed at the end of the reporting period, or indicative of conditions that arose after the reporting period. So this is clearly after the reporting period. Do not adjust amounts recognized in the financial statements to reflect non-adjusting events after the reporting period. Further, para 6 of Ind AS 2 defines NRV is the estimated selling price in the ordinary course of business, less estimated cost of completion and estimated cost necessary to make the sale. Further, Ind AS 2 states that inventory is to be measured at lower of cost or net realizable value. Accountant of Jupiter has remeasured after adjusting the event in its financial statement. This is not correct, not in accordance with Ind AS 2 and Ind AS 10. Accordingly, the event causing the damage to the inventory is a non-adjusting event, as it does not affect conditions at the reporting date. Non-adjusting events are not recognized in the financial statements, but are disclosed where they are effective material. Okay. Therefore, as per the provisions of Ind AS 2 and Ind AS 10, the consignment of inventories shall be recorded in the balance sheet at a value of 8 lakhs calculated below. So that clarifies the stance, whatever is there. Any other difficulties in this question?
No, sir.
कुछ है ही नहीं इसमें, right? All right. Okay, fine. So these are the kind of things you can expect. Okay. There are some very good questions also. Okay. So if you are doing this question, you need to have a complete detailed idea of whatever you are having as far as your indices are concerned. You need to know the disclosures, you need to know the treatments, you need to know the adjustments, and you need to give those details here for the purposes of your examination. Okay. On 1st April, okay, we come to case study 4. On 1st April X1, Sun Limited has acquired 100% shares of Earth for 30 lakhs. Okay. Sun has 3 cash generating units, A, B, and C, with fair value of 12, 8, and 4 lakhs respectively. Company recognizes a goodwill of 6 lakhs relating to CGU C only. So there is a goodwill on acquisition that is attributable only to cash generating unit C. During financial year X2, X3, CFO of the company has a view that there is no requirement of any impairment testing for any CGU, since their recoverable amount is comparatively higher than the carrying amount, and he believes there is no indicator of impairment. Analyze whether the view adopted by the CFO of Sun Limited is in compliance with the Ind AS. If not, advise the correct treatment in line with the relevant Ind AS. Okay. So now, first of all, what is this? The question is on which standard?
Sir, impairment testing के लिए.
Ind AS 36. Ind AS 36. All right. Now, when we talk about Ind AS 36, from a CGU perspective, if your CGU's recoverable amount is higher, do you need to do the impairment?
No, sir.
No. If it is higher, you do not need to do the impairment. But in this case, I have a goodwill of 6 lakhs.
CGU A और B के लिए impairment testing नहीं भी की तो चलेगी, but CGU C में goodwill है जिसका annually impairment testing के लिए चेक करना चाहिए, इसीलिए C का होना चाहिए था.
Yes. So what the CFO is saying is no requirement of impairment testing for any CGU. But that statement is not right, because since goodwill is allocated entirely to C, I need to do an impairment testing for goodwill on an annual basis. Are we able to understand? Yes.
Yes, sir.
So that takes care of case study 4. 5, I will park it for tomorrow. This is a very detailed question that deals with preparation and presentation of financial statements in the format. Okay? So this I will push it for tomorrow. Next. Okay. So now we come on to two other questions. Okay. Case study 6 and 7. Then we'll do some of the test your knowledge questions. But before that, I think we can take a break now. I'm giving quite an early break. Okay. You want a break now or we continue for some more time?
So can continue.
Continue कर सकते हैं? Everybody?
Yes, sir.
Yes, sir.
Good. This question is very interesting. Okay. Mumbai Challengers, a listed entity, is a sports organization owning several cricket and hockey teams. The issues below pertain to the reporting period ending 31st March 20x2. Owing to the proposed schedules of Indian Hockey League as well as Cricket Premier Tournament, Mumbai Challengers Limited needs a new stadium to host the sporting events. This stadium will form a part of the property, plant and equipment of the company. Mumbai Challengers began the construction of the stadium on 1st December 20x1. The construction was completed in 20x2x3. Costs directly related to the construction amounted to 140 crores in December 20x1. Thereafter, 350 crores have been incurred per month until the end of the financial year. The company has not taken any specific borrowings to finance the construction, although it incurred finance costs on its regular overdraft during the period, which were avoidable had the stadium not been constructed. Mumbai Challengers has calculated that the weighted average cost of borrowings for the period 1st December X1 to 31st March X2 amounted to 15% per annum on an annualized basis. Company seeks advice on the treatment of borrowing costs in its financial statements for the year ending 31st March 20x2. ये हो गया पहला हिस्सा. So this deals with which standard?
23. Ind AS 23.
Ind AS 23. Okay, Ind AS 23. So Ind AS 16. Read with Ind AS 23. Okay. Now, Mumbai Challengers. This is the first part. Second part, Mumbai Challengers acquires and sells players' registrations on a regular basis. For a player to play for its team, Mumbai Challengers must purchase registrations for that player. These player registrations are contractual obligations between the player and the company. The cost of acquiring a player's registrations include transfer fees, league levy fees, player agents fees incurred by the club. At the end of each season, which happens to be the reporting period end for Mumbai Challengers, the club reviews its contracts with the players and makes decisions as to whether they wish to sell or transfer any players' registrations. Company actively markets these registrations by circulating with other clubs a list of players' registrations and their estimated selling price. Players' registration are also sold during the season, often with performance conditions attached. In some cases, it becomes clear that a player will not play for the club again because, for example, a player sustaining a career-threatening injury or being permanently removed from the playing squad for any other reason. The playing registrations of certain players were sold after the year end for total proceeds net of associated cost of 175 crores. These registrations had a book value of 49 crores. Mumbai Challengers seeks your advice on the treatment of the acquisition, extension, review, and sale of players' registration in the circumstances outlined above. Okay. Mumbai Challengers measures its stadium in line with the revaluation model, and an airline company has approached the directors offering 700 crores for the property naming rights of all the stadiums for 5 years. 3 directors are on the management boards of both Mumbai Challengers and the airline. Additionally, statutory registrations regulate the financing of both the cricket and hockey clubs. These regulations prevent contributions to the capital from a related party, which increases equity without repayment in return. Failure to adhere to these legislations cannot lead to imposition of fines and withholding of prize money. Mumbai Challenges wants to know how to take the account of the naming rights in the valuations of the system and the potential implications of the financial regulations imposed by the legislation. ठीक है? क्वेश्चन समझ में आया?
तो लास्ट वाला थोड़ा नहीं समझा।
ठीक है, लास्ट वाला हम करते करते कर लेंगे, बट पहला दो समझ में आ गया?
जी सर।
यस
यस सर।
ऑल राइट, जीनी कंफर्म, पूजा ऑल्सो कंफर्म, मोनिका?
यस सर।
अच्छा, आज मोनिका सैटरडे सैटरडे चल रहा है।
नो सर, एक्चुअली मुझे थोड़ा सा
कोई बात नहीं,
जुकाम
कोई
वगैरह
बात
हो,
नहीं, ठीक है।
ठंडी है यहाँ पे।
यस यस, okay, fine. So coming on to Ind AS 23, that is your borrowing cost. Okay, all right. First thing, there is no specified borrowing, but there is a general overdraft. So what should the treatment of the borrowing cost be? What should the treatment of borrowing cost be in this particular case? Is there a qualifying asset?
Yes sir।
Yes. What is your qualifying asset?
कंस्ट्रक्शन ऑफ स्टेडियम।
वो जो आप स्टेडियम बना रहे हो। Now that becomes a what is a qualifying asset in line with Ind AS 23?
Which takes a substantial period of time to get in intended use.
Which takes a substantial period of time to get ready for its intended use or sale. These are directly attributable to the acquisition, construction, or production of a qualifying asset. That are those borrowing costs that could have been avoided if the expenditure on the qualifying asset had not been made. If you see the question, it's mentioned in one place that if the stadium was not constructed, these costs could have been avoided. So that means I have to take that into consideration. To the extent an entity borrows funds generally and uses them for the purpose of obtaining a qualifying asset, the entity shall determine the amount of borrowing cost eligible for capitalization by applying a capitalization rate to the expenditure on that asset. Capitalization rate shall be the weighted average of the borrowing cost applicable to all borrowings of the entity that are outstanding during the period. So in this particular case, the rate is 15% per annum. And which period shall you capitalize?
So from December to March.
From December to March. From December to March. Okay. So December, you incurred 140 crores. So 15%. Incurred till December. Okay. All right. Next. Cost incurred in January, 350 crores into 15% into 3 by 12. February, 350 into 15% into 2 by 12. 31st March into 1 by 12. So 33.25. Are you able to understand?
Yes sir।
If 4 by 12, 3 by 12, 2 by 12, 1 by 12. Did you understand this?
Period outstanding.
Yes. Period outstanding from December till March. So 4 months you have utilized it. Next you have utilized 3, then 2, then 1. Is it okay?
Yes sir।
Yes, so 33.25 crores. So the borrowing cost to be capitalized is computed as 33.25 crores. Or alternatively, you can take weighted average 140 plus 490 plus 840 plus 1190 divided by 4 into 15% into 4 by 12. So that gives you again 33.25 crores. That gives you 33.25 crores. Okay. Next. Part B. Part B. The company is involved in buying and selling players' registrations, quite similar to the IPL that happens, right? So each player, when you buy a player, what does it mean? You are entering into a contractual obligation with that player. That player will play for your club, and in return, you are obligated to pay the money to him. So in this case, the player registrations are contractual obligations. So if you remember in days 38, somewhere they have mentioned that an intangible asset could also be a contractual obligation. Do you remember?
Yes, sir.
Yes, Jeannie, Monica.
सर वॉइस स्टक हो गई थी आपकी.
अच्छा, कहाँ से?
सर प्लेयर रजिस्ट्रेशन से.
Achha, so player registration, this is typically what happens in the IPL scenario. This is typically what is happening in our current IPL scenarios, right? So now I have a club that is having a contract with an IPL player to play for his club. Now, if that player plays for his club, it will give an increased viewership. That could be a very popular player, or that player is so talented that wherever he goes, he gives a significant contribution and that club wins. So by way of winnings also, there will be a monetary benefit. So can I say that this hiring the player to play for a club becomes an intangible asset?
Yes, sir.
Yes, sir.
है ना, ये मेरे लिए तो हो गया ना intangible asset.
Yes, sir.
But you are buying a player. I'm buying a player, but my asset is that contract that is there with the player, that he will play with me only and with nobody else in the club. Yes?
Yes,
So
sir.
it becomes an intangible asset.
काइंड ऑफ कॉपीराइट हमने उसका ले लिया एक तरीके से.
हाँ, kind of. ठीक है? For the duration of that season, that player cannot go anywhere else. I will get the monetary benefit from that player. Now, these player registrations are contractual obligations, and the cost of acquiring players' registrations include transfer fees, league levy fees, player agents fees incurred by the club. So what is the intent of giving this? What is the intent of giving this? If you remember in TS 38, one of the requirement to recognize an asset is the cost should be measured reliably. These three headings are there. That means costs can be measured reliably under these three categories. Okay. At the end of each season, which happens to be the reporting period end for Mumbai Challenges, the club reviews the contracts and makes decisions as to whether they wish to sell or transfer. And then it actively markets these registrations by circulating with other clubs. Players' registrations are also sold during the season, often with performance conditions attached. In some cases, it becomes clear that a player will not play for the club again. So, if he has sustained a career-threatening injury or being permanently removed from the playing squad for any other reason. Okay, so now let us come. In days 38, acquisition. They have given all the data, all the explanation. This is something that you would also be expected. You would also be expected to do. Player registrations would be classified as held for sale under Ind AS 105 when their carrying amount is expected to be recovered. You need to have the sale as highly probable. The asset should be actively marketed for sale at a price that is reasonable in relation to its current fair value. In the given case, it would appear that management is committed to a plan to sell the registration. Why committed? Because therefore, the wordings you have to see, it is at the end, club reviews the contracts. It wants to release a player from the contract. It wants to bring in new players, makes decision as to whether they wish to sell or transfer. The company actively markets. Remember the words in Ind AS 105. There also they have clearly specified that Only when you are actively marketing and you want to sell within 1 year can you categorize it as held for sale. Is it okay?
Yes, sir.
Yes, sir.
Non-current assets held for sale, is it limited to property, plant and equipment?
No.
No, it's not saying PPE held for sale. It's saying non-current assets held for sale. So non-current assets में कुछ भी आ सकता है. Yes, anything can come under non-current assets held for sale. Okay, जो भी है. Now, it is actively marketing, and sometimes players registrations are also sold, often with performance conditions attached. In some cases, it becomes clear that a player will not play, for instance, in case of a life-threatening, in case of a career-threatening injury or being permanently removed from the squad. The playing registrations of certain players were sold after the year end for total proceeds of 175 crores. These had a net book value of 49 crores. Okay, so now if we look at the players' registrations, the management is committed to a plan to sell. The asset is available for immediate sale. An active plan to locate a buyer is already in place. Ind AS 105 stipulates that it should be unlikely that the plan to sell would be significantly changed or withdrawn. To fulfill this requirement, it would be prudent to, if only those registrations are classified as held for sale, where unconditional offers have been received prior to the reporting date. Once the conditions for classifying assets in accordance with Ind AS 105 are fulfilled, the player registrations would be stated at lower of carrying amount and fair value less cost to sell, with carrying amount stated in line with Ind AS prior to application, subject to impairment if any. In none of these questions are you given figures to calculate. Are you given figures to calculate something? बहुत ज्यादा calculation नहीं था इस question. Okay. Profits and losses on sale of registrations would be computed by deducting carrying amount from the fair value of the consideration receivable net of transaction costs. In case a portion of the transaction is receivable on occurrence of a future performance condition, this would be recognized in the P&L only when the conditions are met. Player registrations disposed of for 175 crores, having corresponding book value of 49 crores, would be disclosed as a non-adjusting event in accordance with Ind AS 10. Is it okay?
Yes, sir.
Yes, काफी हद तक हो गया. All right. Now,
Yes.
there is a career-threatening injury to a player. Career-threatening. So, he will not be able to perform to his fullest extent, or he will not be able to perform at all. ये कौन सा सिनेरियो होगा?
मीन्स हम उसे टीम में नहीं रखेंगे, टीम से बाहर निकाल सकते हैं.
हाँ,
राइट ऑफ करना है उसको, तो मतलब राइट ऑफ कर लो या इम्पेयरमेंट कर दो.
career threatening injury. Can I say that my asset is impaired?
Yes,
यस
impairment.
सर, इम्पेयरमेंट.
वो एसेट है ना, वो मेरे लिए खेल रहा है. अभी उसको इंजुरी हो गया. So he is unable to play for me. So can I say that my asset is impaired? Obviously, that asset becomes impaired. So you can see how we are correlating what we have already studied to practical scenarios. Okay, to practical scenarios. This is exactly what is expected from you at this level. Ind AS पढ़ना, Ind AS पढ़ाना, उसका ये करना, उसका understanding लेना is required. But going forward, it is these kind of questions that become more and more common from an examination perspective. Okay. Ind AS 36 requires companies to annually test their assets for impairment if carrying amount exceeds its recoverable amount. Recoverable amount का definition दिया है. Okay. In the given scenario, it is not easy to determine value in use, as that player cannot generate any cash flows on his or her own unless via a sale transaction or an insurance recovery. An individual player cannot be separated from a cash generating unit. There may be certain instances where a player is taken out of the CGU when it becomes clear that he or she will not play for the club again. If such circumstances arise, carrying amount shall be assessed against the best estimate of player's fair value less any cost to sell, and an impairment charge should be recognized in the P&L, which reflects any loss. Are we able to follow?
Yes, sir.
Yes. So this ends up becoming a cause for impairment. This ends up becoming a cause for impairment. Okay. All right. Next. We'll look at part C after the break. We'll look at part C after the break. In the meantime, try to read this part C. Don't look at the solution, just read the question if you have the time. We'll reconvene at around 9. Okay? 9 बजे हम फिर बैठते हैं. ठीक है? All right. Break, please. अच्छा, ठीक है. Okay. All right. So coming back. Yeah. So coming back to the part C of this question, Mumbai Challengers measures its stadium in accordance with the revaluation model. An airline has approached the directors offering 700 crores for the property naming rights of all the stadiums for 5 years. Now, see, this is not connected to the stadium that is getting constructed in part A. It's basically all the stadiums. So an airline company has approached the directors for 700 crores. So what they want to do is stadiums may they want to put in their name. So they get the advertising also for their name. Okay. Three directors are on the management boards of both Mumbai Challengers Limited and the airline. So I have on one side Mumbai Challengers, on other side I have the airline. Both these have common directors. Both of them have common directors. Okay. Now, additionally, statutory legislations regulate the financing of both the cricket and hockey clubs. These regulations prevent contribution to the capital from a related party, which increases equity without repayment in return. Okay. Now, the airline company wants to pay 700 crores to the club for naming rights. Both of them have common directors. This club is regulated. This is regulated. Regulated का मतलब क्या है? It is under regulatory scrutiny. That means if any money is coming into Mumbai Challengers, that means anything from a related party. The airline company and Mumbai Challengers having common directors, something is coming in from a related party, which increases the equity of Mumbai Challengers. When you make a payment without for renaming rights, then Mumbai Challengers will not have the obligation to pay it back. Yes or no? Bolo yaar. Yeah, it will not have an obligation to pay it back. And because it is not having an obligation to pay back that amount, it results in an increase in equity. Yes. So therefore, this point is regulated. This point is regulated. And therefore, failure to adhere to these legislations could lead to imposition of fines and withholding of prize money. Mumbai Challengers wants to know how to take account of the naming rights in the valuations of the stadium and the potential implication of the financial regulations imposed by the legislations. Okay, so now let us understand. Valuation of stadiums. Stadiums in line with Ind AS 113 would be valued at the price to sell the asset in an orderly transaction between market participants. The price would be the one which maximizes the value of the asset, and it would essentially use level 2 inputs, which are quoted market prices plus certain observable inputs either directly or indirectly. Property naming rights present complications when valuing the property. It is like saying if you have been to, I don't know from which cities you all are, but if you go to any metro station, so some of these metro stations would have the names of the companies which are maintaining them. If you come to a city like Bangalore or Bombay, you may be having certain stations which are named. Let us say, for example, if IndusInd Bank has named one of the metro stations, it will be named as IndusInd Bank Andheri, for example. Okay. If you have anything in Ahmedabad, then one of the metro stations will be named from by the company that is maintaining it. So we call that as renaming rights. We call that as renaming rights. Okay. You have you have a lot of these public assets where the maintenance is done by the companies. They also get renaming rights. So in this case, the stadiums they will be given renaming rights. So it will come as, if Tatas are maintaining, then it will come as Tata Steel Wankhede Stadium, for example, okay, it will come as Tata Steel Jawaharlal Nehru Stadium. So whoever is maintaining it, their names will come before. So that is the renaming rights. Now these renaming rights will not come free of cost. These renaming rights will not come free of cost. Obviously, the company is getting such a huge visibility because every time there will be a cricket match, they will always tell 1,000 times the name of the venue at each advertisement, location, TRPs, whatever is there, whatever advertising on the internet, the name of the company will be repeatedly getting hit. And therefore, it increases the visibility of the company. That increased visibility can turn into certain businesses, certain endorsements for the company, which will obviously increase the valuation, which will increase the revenues for the company. It could be a marketing thing, or it could be something that is viewed in the category of CSR. Okay, so like now you have most of these archaeological monuments, right? Most of these archaeological monuments, they will be maintained by a particular corporate as part of their CSR responsibility. So when they are maintaining it, they would obviously not do it for free. They will want something. So they will say, this heritage monument is maintained by XYZ Private Limited. So XYZ Private Limited also is working on maintenance of monuments. It creates a kind of respect for the entity. It creates some kind of what you can say, it creates some kind of a positive image for the entity. And this image is what you will have a quid pro quo. You will give the property naming rights. In return, the company gets the benefit. Now, when I have to do the valuation, clearly these property naming rights will present a complication. These property naming rights will present a complication. The status of the property indicates the suitability for inviting sponsorship attached to its name. It has nothing to do with the property itself. Abhi 700 crores ka renaming rights. What does it have to do with the property? Property is situated in X location at Y price. The valuation is based on the overall square feet value that is there for that particular place. You are able to identify. But when you are attaching renaming rights to that, the valuation starts getting complicated. The valuation could start getting complicated. However, what is important to notice, it will be in addition to the existing fair value. It will be in addition to the existing fair value. It cannot be in substitute of that. It cannot be in substitute of that. And therefore, when I'm valuing the stadium as per Ind AS 113, I will also add the property renaming rights and I will write it off over whatever time period is there for that renaming. Okay, in this case, they've given 3 years. You can write it off over 3 years. Is it okay? Have you understood?
सर लेवल 3 क्यों नहीं आया, लेवल 2 क्यों आया, जबकि सिग्निफिकेंट चेंज था?
नहीं, एक मिनट, हम लेवल 2 की बात कर रहे हैं ओनली फॉर द स्टेडियम वैल्यूएशन, not for the property rights. If you look at the way it is, stadiums would be valued at the price which would be received to sell the asset. This price would be the one which maximizes the value of assets, and it would essentially use level 2 inputs, which are inputs other than quoted market prices, which are observable for the asset or liability directly or indirectly. This paragraph is for standalone stadiums only. ठीक है?
ओके सर.
This is without the property rights. The property rights is adding a further complication to it. The property rights are adding complication. So what they tell is it has nothing to do with the property. And therefore, Mumbai Challengers could include this in the valuation of the stadium, and then they could write it off within the tenure. So why do I have to include it separately is because stadiums can exist for 10, 12, 15, 20 years, 25 years because it's immovable in nature. But property renaming rights, you will not give permanently to one entity. Okay. You will again invite for bids after say 3 years or 5 years, whatever it is. IPL sponsorship rights. The key sponsor contract is typically for a tenure of 5 years or 7 years, I think. After 5 or
तो
7
कह
years,
सकते हैं कि 113 और Ind AS 38 simultaneously applicable हो रहे हैं.
Ind AS 38 gets added. The property naming rights gets added to the valuation of the stadium. Gets added to the valuation of the stadium. ठीक है?
सर
Yes.
सर आई वाज कंफ्यूज कि ये ट्रांजैक्शन जो है 115 रेवेन्यू कॉन्ट्रैक्ट्स विद कस्टमर्स क्यों नहीं है आया?
अच्छा, एक मिनट पहले आई जस्ट फिनिश मोनिका's question. Monica, property naming rights is an intangible asset for the company giving the money. Okay? It is not an intangible asset for the club receiving the money. वो मेरे लिए it is not an intangible asset. I am getting the consideration. Okay? So
Okay.
this goes as part of my stadium valuation. ठीक है?
Okay, sir.
Whether after I take the money, what is the treatment? We will have a look at that later. It has nothing to do with the property. So they could include the property naming rights in the valuation of the stadium and write it off over 3 years. Achha, now coming to the next question that Pooja has asked, that why are we not treating this as a revenue? Why are we treating it as something that's related to valuation of the stadium? Because in this case, what is the obligation that I'm giving? What is the performance obligation I'm fulfilling? I'm giving the rights to name a stadium, right? I'm giving the right to name a stadium. That is not part of my product offering. As a product, as a club, my job is to ensure that I carry on the activities of constructing stadiums, matches, getting incomes from those matches, and then making money out of the game. In this case, my stadium is an asset which is already visible globally. Only the renaming rights of that stadium is what I'm selling. So going forward, I cannot call it as only a Mumbai Challenger Stadium. I will add a prefix or suffix of the entity that is sponsoring for those renaming rights. So it won't become an income. It won't become an income. Rather, it will come in the form of valuation of the stadium. You will take it and then you will amortize it. Right now, it is part of my valuation of the stadium. Here, in this case, the question is more not focusing on the treatment of it in the form of revenue. Rather, if you see the question, what is it asking? It is asking how to take account of the naming rights in the valuation of the stadium. It's specifically not focusing on revenue. So the key point is here you can add it to the valuation of the stadium per se. Yes, treatment ultimately it comes in as your income and ultimately you will amortize it over a tenure of 3 years, considering that the renaming rights are for a period of 3 years. But right now, when I'm valuing my stadium, this becomes a very significant component and I can add it to the level 2 input value that I have for that stadium. Is it okay?
So means अगर ये लास्ट वाला सेंटेंस वैल्यूएशन ऑफ नेमिंग राइट्स का इफेक्ट
आप
नहीं
उसको रेवेन्यू ले सकते थे.
ओके
आप उसको उस समय पे you could take it as a revenue.
भले अगर क्वेश्चन ये नहीं बताता कि उसकी रेगुलर एक्टिविटी है या नहीं
Not required. Not required. Because renaming rights is something which is very common in the infrastructure business, right? You
Okay,
can
sir.
look at, see, in Wankhede, for example, stands are named after players. That is because of the contributions that they have given. But at the same time, you will be having certain stadiums where stands are named after companies. Now that is an income for the entity, right? Abhi, when you look at the IPL that is being played, BCCI came up with the concept of the IPL. Now IPL is named as Vivo IPL 2020 or Tata IPL 2023. So BCCI is getting the sponsorship income. Today, if I have to value the IPL as a business, I will take into consideration the value of those broadcasting rights. I cannot say IPL as a standalone has this value. The broadcasting rights contribute significantly to the value of IPL as a business. But if I ignore this valuation and I just talk about how will BCCI treat this sponsorship, it will be nothing but income. It will be nothing but income. Is it okay?
Yes, sir.
Yes. So now coming to this particular part on related party disclosures. Okay. We have studied related parties. Tell me one thing. If one or more directors are common between two entities, will it become a related party? बोलो.
नॉट नेसेसरी, स्टेक ऑफ द डायरेक्टर्स कितना है वो डिपेंड करता है.
It's not at all necessary. Having common directors in two entities will not necessarily mean that both those entities are related. आपको related party I think we had only done together ना? Yes?
Yes, sir.
So related party में what was the fundamental requirement? One leg should have control or joint control. The other leg should have control, joint control, or significant influence. Only if these two things happen, then the two entities are related to each other. So if I have A, B, and C, B and C will be related only if A has control or joint control over B, and A is having control, joint control, or significant influence over C. If these two conditions exist, only then I can say that B and C are related. If B's director is also C's director, it's not necessary that B and C end up getting related to each other. Is it okay? Do you remember this?
Yes, sir.
Yes.
Yes, sir.
Jini, are you able to remember Pooja?
Yes, sir.
कभी एक जमाने में पढ़ा था. Yes.
इसी जमाने में पढ़ा था.
कंप्लीट चार्ट बनाया था बहुत बड़ा.
हाँ, बहुत बड़ा, बहुत पहले बनाया था. अभी फिलहाल याद नहीं है ना?
सर याद है.
ठीक है, चलो अच्छी बात है. हमें याद नहीं है. ठीक है. All right. Ind AS 24 related party disclosures list the criteria for two entities to be treated as related parties. Such criteria include being members of the same group. Same group we had discussed, parent and its subsidiaries. These things together form one group. Or where a person or a close member of that person's family is related to a reporting entity if that person has control or joint control over the reporting entity. Be very careful. We have a tendency, particularly in India, हम लोग क्लोज मेंबर को छोड़ के रिश्तेदार बना देते हैं उसको, रिलेटिव्स. आंसर में योर हेड विल से क्लोज मेंबर, योर हैंड विल राइट रिलेटिव्स. ओके, बिकॉज आपको लगता है क्लोज मेंबर और रिलेटिव में यार कोई फर्क नहीं है. ऐसा नहीं है. ओके, क्लोज मेंबर कैन बी अ फ्रेंड who is not having any blood relations. Okay, so don't mention it as relatives. This has come in one of the observations from NFRA also, जहां पे कंपनी के financial statements में it was mentioned that relatives of the relatives of the key managerial personnel. Relatives is not going to be the term. You have to use the words close members of the person's family. That is what makes it correct. That is what makes it correct. So, if that person has control or joint control over the reporting entity. Now, Ind AS 24 deems that parties are not related simply because they have a director or a key manager in common. This is what all of you told me in the beginning, and I also agree to that. In this case, there are three directors in common, and in absence of any information to the contrary, it appears that the entities are not related. However, the regulator will need to establish whether this deal, sponsorship deal, is a related party transaction for the purpose of financial control provision. There would need to be demonstrated that it would need demonstration that the airline may be expected to influence or be influenced by the club or a related party of the club. If the deal is deemed to be a related party transactions, let the regulator evaluate whether it is at fair value or not. So that is what they have asked. They have not asked very fancy things. Okay, उन्होंने सिर्फ इतना पूछा, valuation of stadium, will the renaming rights have an implication? It does have. And entering into a transaction with the company that is having common directors, it will not necessarily be a related party transaction, but you will of course have to look into the what do you say, what the regulator fixes as related parties. Okay, okay, so that takes care of this question. Any doubts so far?
No,
Was
sir.
it interesting?
Yes, sir.
Yes, sir.
So you can expect such questions.
वाले चैप्टर में तो इतने ऐसा क्वेश्चन ही नहीं है जो इसमें है.
So my suggestion, so there are so many resources which are available. Maybe you could consider, for your exam preparation, don't deviate much. But you could consider referring to accounting courses across the globe for more such questions. Okay, for more such questions. All right. So now let us look at this question. This is also a very interesting one. Okay. This is also a very interesting one. Okay. Neelanchal Gas Refinery Limited, hereafter referred to as Neelanchal, a listed company, is involved in the production and trading of natural gas and oil. Neelanchal owns an underground storage facility with another entity, Seemanchal Refineries Limited, hereinafter referred to as Seemanchal. So we are having N and S. Okay. Both the companies are engaged in extraction of gas from offshore gas fields, which they own and operate independently of each other. So N has its own gas fields, S has its own gas fields, they operate independently. Neelanchal owns 60% of the underground facility, Seemanchal owns 40%. Both the companies both the companies have agreed to share services and costs accordingly, with decisions relating to the storage facility requiring unanimous agreement of the parties. So what is the situation is, N is into oil and gas production and trading. S is also doing the same thing. Both of them extract the gas from offshore oil fields independently, but they have joined hands to put an underground storage facility. They have joined hands to put an underground storage facility. That underground storage facility, N is owning 60%, S is owning 40%. Both the companies have agreed to share services and costs, with decisions on the storage facility to be taken unanimously. The underground facility is pressurized so that the gas is pushed out when extracted. When the gas pressure is reduced to a certain level, the remaining gas is irrecoverable and remains in the underground storage facility until it is decommissioned. As per the laws in force, the storage facility should be decommissioned at the end of its useful life. Neelanchal seeks your advice on the treatment of the agreement with Seemanchal as well as the accounting for the irrecoverable gas. अच्छा, अभी आप बताओ. Neelanchal, Seemanchal, both of them joined hands to form a storage facility. है ना? So आप बताओ, tell me one thing. This storage facility, N is owning 60%, S is owning 40%. Now, in 60 and 40, what have they agreed? They have agreed to store this gas which they have extracted, but they have agreed to share services, share the cost, and any decision relating to the storage facility has to be taken unanimously. आपने Ind AS 103 पढ़ा. You have studied Ind AS 110. You have studied Ind AS 27, Ind AS 28, Ind AS 111. You tell me, what is this arrangement as far as the storage facility is concerned?
Sir, 111, joint arrangement.
Joint arrangement. Will it become a joint venture in days 28?
नो सर।
किस लिए?
सर जॉइंटली वो सिर्फ ऑपरेट कर रहे हैं, अलग कोई सेपरेट व्हीकल ऑर्गेनाइजेशन या कंपनी
That's
नहीं।
right. There is
So
no
you're getting,
separate. Yes, that's right. Absolutely right. Okay. All right. The structure and form of the arrangement determines the nature of relationship. However, irrespective of the purpose or structure, classification of joint arrangements depends upon the parties' rights and obligations. Accordingly, a joint arrangement could be classified as a joint operation or a joint venture. A joint arrangement which is not structured through a separate vehicle, which all of you are saying, is a joint operation. In such cases, the contractual arrangement establishes the parties' rights and obligations. A joint operator accounts for the assets, liabilities, revenues, and expenses relating to its involvement in a joint operation in line with the relevant Ind AS. Based on the information provided, the arrangement with Semanchal is a joint operation. A joint arrangement can be either a joint venture or a joint operation. Joint operation hai ye because there is no separate vehicle that is formed, but decisions are taken unanimously, and therefore whatever is the proportionate share of property, plant, equipment, Neelanchal Gas Refinery should recognize its share of the asset as property, plant, and equipment. Is it okay till now? Is it okay till now?
Yes, sir.
Yes, all right. Now, अभी स्टोरेज फैसिलिटी में थोड़ा सा technically you can understand. So this storage facility will have an outlet because obviously it's meant to store the gas, and whenever the gas is stored, it will have an outlet that connects to the pipeline. Acha. Now, isme you already have the extracted gas stored. Now, when this gas has to be sent into the pipeline, a pressure has to be put. So they will put in an external pressure onto the storage. And once they put in the pressure, the gas will get pressurized and ultimately it will come out and flow into the pipeline. So this is what the storage facility does. Now, let us move next. Clearly, what they have said is, when the gas pressure is reduced to a certain level, the remaining gas is irrecoverable. देखो, whatever pressure you apply, in the end, there is always some amount of gas which is irrecoverable. ये आप कुछ भी करो, आपको ये वाला गैस मिलेगा नहीं. The purpose of this gas is to provide you the benefit of pressurizing the compartment so that new gas that you have stored in gets gets released. The new gases get released. Are you able to understand? Yes.
Yes.
So some amount of gas is always going to be irrecoverable. And that irrevocable gas can be recovered only at the end when you are decommissioning. Is it okay? Yes. ये question है. Okay, now tell me, this irrecoverable gas, is it helping in extracting the new gas that is stored in this facility?
Yes, sir.
आप प्रेशर डालोगे स्टोरेज फैसिलिटी पे, थोड़ा तो गैस नीचे बच जाएगा, बट दैट विल हेल्प इन पुशिंग आउट द गैस इनटू द पाइपलाइन, है कि नहीं?
यस सर.
यस. देन आप रिलीज करोगे, गैस गेट स्टोर्ड अगेन. Again, you put the pressure, some amount of gas is irrecoverable, the remaining goes into the pipeline. Every time this happens, and every time the same irrecoverable gas continues to remain in that storage facility. Now tell me, that irrecoverable gas which is there, which is a part of the storage facility, is it giving rise to monetary benefits?
Yes.
Yes, because it is enabling the other gas to move into the pipeline and it monetize and get monetized. Yes or no?
Yes, sir.
Yes, sir.
So can I say that this irrecoverable gas is also nothing but property, plant and equipment?
Yes, sir.
Yes, है कि नहीं? See,
Yes,
you
sir.
have the storage facility. Storage facility mein there is some irrecoverable gas. The function of that gas is to ensure the remaining gas, whenever you apply the pressure, it moves into the pipelines. It moves into the pipelines. Are you able to follow?
Yes, sir.
Some amount of that amount of gas will never be recovered. Only at the time of decommissioning, you are going to recover it. So can I say that that irrecoverable gas is having such a critical functionality that it is helping monetize the gas that is stored in the facility? So can I say that this irrecoverable gas is nothing but property, plant and equipment?
Yes.
Yes,
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 sir.
sir.
Monica?
Yes, sir.
It's very difficult to imagine, right? कि ऐसा भी हो
Yes.
सकता है क्या?
Yes, sir.
Because हमारे लिए तो only the storage facility is an asset, a property plant item of property plant equipment. Yes, but
Yes.
can the gas become an asset is something which probably we could not even imagine, है ना?
Yes, sir.
Yes. So therefore, this gas is also a part of property, plant and equipment. Therefore, the irrecoverable gas being a part of the storage facility should be capitalized as a component and should be depreciated to its residual value over the life of the storage facility. However, if the gas is recoverable in full upon decommissioning, then depreciation will be recorded only if the estimated residual value decreases below cost during the life of the facility. Okay. Upon decommissioning, so obviously storage facility plus irrecoverable gas ka cost proportionately 60% will go to Neelanchal, proportionately 40% will go to Seemanchal. Have you understood this?
Yes, sir.
Yes, समझ में आ गया? Yes.
Yes.
All right. Upon decommissioning of the storage facility, when the cushion gas is extracted and sold, the sale of irrecoverable gas is accounted as a disposal of an item of property, plant and equipment. Very nice. So whatever is irrecoverable is kept in as property, plant, equipment, and the resulting gain or loss is recognized in the P&L. The natural gas in excess of the irrecoverable gas, which is injected into the facility, would be treated as inventory in accordance with Ind AS 2 inventories. Are we able to follow?
Yes, sir.
Yes. I hope everyone follows.
Yes, sir.
Yes, sir.
ठीक है. Now, Neelanchal has entered into a 10-year contract with Uttaranchal refineries for the purchase of natural gas. अच्छा, तो एक तो हो गया extraction and trading. Now demand is so high that it now wants to purchase and sell. So Neelanchal has paid an advance to Uttaranchal equivalent to the total quantity of gas contracted for 10 years based on the forecasted price of gas. Today's date, I have already paid for 10 years supply of gas. Are you able to follow? Yes. क्या किया हमने? Did you understand?
Yes,
Advance
sir.
payment.
एडवांस पेमेंट फॉर द नेक्स्ट 10 years कि बेटा मैं आपसे जो कुछ भी गैस सप्लाई करवाऊंगा उसका एडवांस पेमेंट मैं 10 years का ऑलरेडी कर दिया है. डिड यू अंडरस्टैंड?
Yes, sir.
Yes, sir.
This advanced amount carries interest at the rate of 12.5% per annum, which is settled by Uttaranchal by way of supply of extra gas. मतलब ध्यान से सुनो, I have paid an advance. The advance is paid for the total gas contracted amount for 10 years. This advance is having an interest levy of 12.5%. That interest also is not coming in cash, it is coming in the form of additional gas. Are you able to follow?
सर आपका वीडियो स्टक हो गया.
अरे बट मेरा ऑडियो तो चल रहा है. हेलो हेलो.
Yes, audio is audible, sir.
वीडियो अभी भी स्टक है.
No, sir.
No sir, now it is okay.
Now it's come back. अच्छा. So are you able to understand? एक तो 10-year advance is given. Yes. मैंने 10 साल में आपसे जो कुछ भी खरीदूंगा, आई विल पे फॉर दैट अपफ्रंट. ठीक है. सो 10-year advance is paid, and therefore 10-year advance is carrying interest at the rate of 12.5%. Yes, this 12.5% settlement also is happening not in the form of cash, but it is happening in the form of extra gas. Are you able to understand?
Yes, sir.
Okay, now we move further. The contract requires fixed quantities of gas to be supplied each month. Additionally, there is a price adjustment mechanism in the contract whereby the difference between the forecasted price of gas and the prevailing market price is settled in cash on a quarterly basis. On a quarterly basis. Okay. मैंने क्या किया? I have paid for 10 years. Yes? बोलो यार.
Yes, sir.
मैंने 10 years का पेमेंट, ऑब्वियसली आई एम नॉट एन एस्ट्रोलॉजर टू फोरकास्ट विथ एक्यूरेसी आने वाले 10 साल में मेरा प्राइस कितना होगा. इट इज अ फोरकास्टेड मेजरमेंट. ओके. नाउ if this forecasted measurement in the future actuals vary, the difference between actuals and the forecasted price will be settled in cash. Did you understand?
Yes, sir.
Yes, Ginny, did you follow? Monica, did you follow?
Yes, sir.
एक बार वापस से आप एक्सप्लेन करेंगे प्लीज. एक्चुअली थोड़ा प्रॉब्लम हो गया नेटवर्क में.
Okay, 1 minute. Let's draw a timeline. Okay, this is 10 years. In this 10 years, I have already paid advance. Let us say at the rate of rupees 60 per kg of gas. Per kg of gas, 60 rupees I have paid. Okay. For the quantity that I expect in the next 10 years. So let us suppose in the next 10 years, you are going to need 1 crore kgs of gas. Okay, 1 crore kgs of gas. That means 60 into 1, I have already paid 60 crores. I have already paid 60 crores. Now, when this is getting executed, what will happen is advance of 60 per kg. Now in year 2, for example, will the price remain the same as forecasted price?
नो सर.
Sir.
हो सकता है या तो 59 हो सकता है market price, or it could be 62. Anything could happen.
यस सर.
Now if it is 59, then I have paid at 60. So I will get a settlement of 1 rupee per kg. Did you understand?
यस सर.
Yes. All right. If it is 62, that differential 2 rupees Neelanchal will pay to Uttaranchal.
यस सर.
That is what is mentioned here. Okay. There is a price adjustment mechanism whereby the difference between the forecasted price of gas and the prevailing market price is settled on a quarterly basis. If Uttaranchal does not deliver the gas as agreed, Neelanchal has the right to claim compensation computed at the current market price of the gas. Is it okay? Neelanchal
Yes,
wants
sir.
to account for the contract with Uttaranchal in line with Ind AS 109. Yes? All right. Now, ये कौन सा कॉन्ट्रैक्ट है? Ind AS 109 applies to those contracts to buy or sell a non-financial item. In this case, this is gas that can be settled net in cash or another financial instruments, or by exchanging financial instruments as if the contracts were financial instruments, with the exception of contracts that were entered into and continue to be held for the purpose of the receipt or delivery of a non-financial item in accordance with the entity's expected purchase, sale, usage requirements. This contract results in physical delivery of the inventory of the commodity, that is the extra gas. Okay, all right. So did you understand this para?
Yes, sir.
Yes, Jeannie? Monica?
Yes, sir.
एक्सक्यूज मी सर, क्या मैं क्लास को फिर से रिजॉइन कर सकती हूँ?
हाँ, उसे पूछना क्या है?
थैंक यू सर.
Yes. Okay. So if you read your financial instruments, there was an exception to the definition of financial instruments for this contract. Do you remember?
Yes, sir.
Commodity-based financial instrument related contracts. Do you recollect?
Yes, sir.
Okay, so this is basically coming from there. So here I am having a contract where settlement happens through the procurement of a commodity. Interest thereon also happens through the procurement of the commodity, but any price fluctuations that is there will be settled in cash. Okay. A contract to buy or sell a non-financial item that can be settled net in cash or another financial instrument may be irrevocably designated as measured at FVTPL, even if it was entered into for the purpose of receipt or delivery of a non-financial item in accordance with the entity's expected purchase, sale, or usage requirements. Okay. This designation is available only at inception. ये याद है आपको? ये आपने किया होगा. Are you able to recollect this?
Yes, sir.
This designation available only at inception of the contract, only if it eliminates or significantly reduces a recognition consistency that would otherwise arise from not recognizing that contract because it is excluded from the scope of this standard. Okay, all right. Now, if you look at this, वो theory पढ़ लेना. The contract with Uttaranchal refineries requires a future settlement by way of delivery of gas. So what is being delivered is extra gas, not cash or a financial instrument for the use of Neelanchal Gas Refinery Limited. Accordingly, it appears that this contract would be an own use contract falling outside the scope of Ind AS 109. And therefore would be treated as an executory contract. However, arguments could be placed that the contract is net settled due to penalty mechanism requiring Uttaranchal refineries to compensate Neelanchal Gas Refinery Limited at the current prevailing market price. Further, if the natural gas is readily convertible into cash at the location of the delivery, the contract should be considered net settled. Additionally, if there is a volume flexibility, the contract should be treated as a written option which falls within the scope of Ind AS 109. Are we able to understand?
Yes, sir.
Yes, so own use contract, probably regarded as own use. Additionally, the entity has not irrevocably designated the contract as measured at fair value through P&L, thus emphasizing own use designation. Is it okay? Yes. So that's about it on Neelanchal and Uttaranchal. So very
Sir,
good question. Hanji.
यहाँ पे भी मेरा सेम डाउट था 115 का, अगर समझो क्वेश्चन में 109 का मेंशन नहीं किया होता तो हम इसे 115 का रेवेन्यू कॉन्ट्रैक्ट और फाइनेंस कॉस्ट दिखाते.
बट यहाँ पे क्या चल रहा है? द होल पॉइंट इज दे हैव आस्क्ड यू नॉट अबाउट रेवेन्यू, बट दे हैव गिवन अ अमाउंट एंड दे आर आस्किंग द they have given the advance and they're asking the nature of that advance. So there is no need for you to go into the other standards. Okay?
यस सर. एंड फ्रॉम द ए केस जो हमने पहले स्टडी किया था यही सेम क्वेश्चन का, उसमें का एक पॉइंट डिस्कस करना बाकी है अबाउट द कंटीजेंट लायबिलिटी ऑफ द 40% ऑफ काउंटर पार्टी.
1 minute. 40% of counterparty.
डिकमीशनिंग कॉस्ट में
Acha, decommissioning cost. That's right. So the decommissioning liability is there in the first case. We skipped that. Okay. All right. The storage facility should be decommissioned. So whatever is your decommissioning obligation, Neelanchal should recognize 60% of that. But where it is a joint and several facility, I will record my 60% as a liability and the remaining 40% as a contingent liability. That's right. So Neelanchal Gas should also disclose 40% of the cost of decommissioning of the underground facility as a contingent liability. Are you able to understand?
सो वो स्टोरेज फैसिलिटी भी वो अपने शेयर का ही अपने बुक्स में रिकॉर्ड करेगा ना?
Storage facility will be at my share of 60%. The irrevocable gas will be at my share of 60%. The decommissioning and restoration obligation will be at my share of 60%. Did you follow this?
यस सर, क्लियर.
आगे चल के जो मेरा decommissioning liability is there, the liability of decommissioning. This liability of decommissioning should also go 60-40. But because it's a joint arrangement, I will also be responsible for the counterparty's error. And therefore, I will create a 40% provision for the loss. I will recognize a 40% contingent liability for the loss that is being attributed to the entity, or for the decommissioning liability that is attributable to the entity. Are you able to follow? Yes, Pooja?
यस सर.
Similarly, the 40% guy, Seemanchal, will recognize a contingent liability for 60%. Did you follow?
यस सर.
Okay. So that is there. Then that closes this question. Very good and very exhaustive question. Okay, very exhaustive question. So I want you to try some of these questions as homework. Okay, I have marked 1, 2, 3, 4. Okay, yeah. I want you to try these 4 questions for homework. Can you try it out?
Yes, sir.
यस सर.
Yes, sir.
Please try it out. And if possible, read this question of Soft Bharti Limited. Yes, this is the question, case study 5. Just read this question so that you are familiar with the adjustments. Okay, so tomorrow we close this question, and those 4 questions, what I told you, once you read that, I think we are more or less sorted as far as this chapter is concerned. Okay, but again, you remember, these are not exhaustive questions. Okay, because we have seen the way the questions are asked. They can ask anything from any corner of this world, and we are expected to be having an answer for that. Is it okay?
यस सर.
Yes. So with that, I think that's it for today. It's almost 10. Okay. Any doubts?
नो सर।
नो डाउट्स? नहीं है? नो डाउट का एक ही मतलब है, या तो सब कुछ समझ गया या फिर कुछ नहीं समझा।
समझ गया सर।
समझ गया, ठीक है, चलो मान लेते हैं। ऑल राइट, सो दैट्स इट। मोनिका, एनी इश्यूज? नो?
नो सर।
अच्छा, जीनी भी ठीक है। ऑल राइट, फाइन। ओके, दैट्स फाइन, फेयर इनफ। तो वो होमवर्क क्वेश्चंस एक बार ट्राई कर लो, छोटे छोटे क्वेश्चंस। ओके, नन
यस
ऑफ
सर।
इज वेरी बिग। सॉफ्ट भारती पढ़ कर आना, वी विल डू अ वेरी डिटेल्ड वर्किंग टुमारो फॉर दैट। Okay, because that's one question which is having preparation of financial statements. So we can follow the complete step by step process and do that. Okay,
सर
so that's.
एक्चुअली आपके
Mhm.
क्लास में ऑनेस्टली बताऊं तो ऐसा लगता ही नहीं कि हम लोग अपने घर पे बैठ के पढ़े, ऐसा ही लगता है कहीं अलग ट्यूशन क्लास चल रही है, इतना इंटरेक्टिव लेक्चर होता है।
वो हाँ, मतलब एक्चुअली आई ऑल्सो गेट बोर्ड ना, अकेला बैठा हूँ कमरे में, तो इट हैज टू बी इंटरेक्टिव। यस, एनीवेज, तो गुड।
सर
ये
वन मोर थिंग, सर वन मोर थिंग, सर अब हमारे सब सेशन ओवर हो जाएंगे, तो
यस,
आप हमें वेटेज बता सकते हैं कि किस पे क्या मोर वेटेज है अकॉर्डिंग टू द एग्जामिनेशन पर्पस।
ठीक है, मैं वेटेज बता दूंगा, वो बदल गया तो फिर मुझे मत बताना। आपके
सर नो
एग्जाम।
नो इश्यूज है, वैसे भी पूरा रिस्क है, कहीं से भी कहीं मतलब कुछ करके जाओगे तो पूरा रिस्क ही होता है।
यस, तो सी, देयर आर सम, सी, कपल ऑफ स्टैंडर्ड्स आर नॉन नेगोशिएबल, वो आपको ढंग से करने हैं। एंड दैट इज एग्जामिनर्स फेवरेट: फाइनेंशियल इंस्ट्रूमेंट्स, कंसोलिडेशन, Ind AS 102, Ind AS 19, and Ind AS 33. These are some of the non-negotiable standards. You have to do it mandatorily 100%. Ind AS 116, Ind AS 115. ये 2 3, these couple of ये couple of स्टैंडर्ड नहीं है, ये बहुत भारी अच्छा खासा पोर्शन हो गया आपका। दिस शुड कवर एटलीस्ट अराउंड 60% ऑफ योर Ind AS सिलेबस। The remaining standards, Ind AS 16, Ind AS 1, Ind AS 8, 10, Ind AS 12, 21, these will not have, these will come in repeat, not on a regular basis. These come maybe ek do attempt chhod ke, you do have these standards coming in. But what I told you, the non-negotiable ones, those you have to do it without anything left. Okay, whether it is in financial instruments, whether it is expected credit loss model, or whether it is splitting of CFI, to should come by now. Splitting of compound financial instrument. Matlab, that is the most basic thing that is there in financial instruments. Expected credit loss bolo, or you can check on this derecognition of financial instruments. All these things also can be asked at any point of time. So those are the ones which are the examiner's hot favorite topics. Okay, वो तो आने ही आने हैं. And these topics will cover at least, around 55 to 65% of your paper weightage. Okay, now I think you do have around 30 marks of MCQs, right? 30 marks of MCQs followed by 70 marks of theory. Okay, even then the theory also will have equal weightage, that is 60% on these couple of topics. वो तो आपको कर ही के जाने हैं किसी भी हाल में. Yes.
मतलब 75 to 80 marks in that topics, right?
Roughly you can take at least 70 marks, you will definitely get from these standards. Yes, definitely. मतलब these come every attempt. A consolidation question they ask for 16 marks and it's done. You can expect it.
Sir, it is always question number one.
हाँ,
I have
that
seen
is
in
always.
the last year's question paper.
लास्ट ईयर क्या, मैं 10 साल पहले की बात कर रहा हूँ, तब भी क्वेश्चन नंबर 1 वॉज कंसोलिडेशन ओनली, 13
Yes,
साल पहले, राइट? सो
yes,
इवन आवर प्रीवियस जनरेशन, जो हमारे फादर्स और उसके फादर, उनके फादर भी जब सीए कर रहे थे, तब भी पहला क्वेश्चन वाज ऑलवेज कंसोलिडेटेड कंपनी अकाउंट्स, ऑलवेज,
yes.
because वो कंपल्सरी क्वेश्चन, मैक्सिमम वेटेज. Okay, so that is always going to be there. So you cannot negotiate on consolidation Ind AS 103. Never. Okay. And those are the easiest scoring questions. Okay, consolidation is one chapter which is the most important along with financial instruments and the most scoring. Financial instruments can get tricky at sometimes, but consolidation kya hai? It's a format based chapter. You put it in the formats, the output will come tallied. आपको कुछ नहीं करना रहता उसमें. So that is why consolidation is one which is very, very simple. Okay. All
सर
right. Yes.
इंट्रोडक्शन टू इंडियाज और जो 101 था जिसका फर्स्ट टाइम एडॉप्शन था और कंसेप्चुअल
Hmm.
फ्रेम इन
Hmm.
टॉपिक्स है इसके क्वेश्चन
Hmm.
आंसर लेन दी रिटर्न आंसर आ सकते हैं या एमसीक्यूज में आएंगे?
See, typically more on the conceptual framework, you can expect something on the MCQs. It's not like you won't get. But the 101, sometimes, see, it's not yet come on a full-fledged basis, but sometimes you can expect an 8 marks question on India's 101. जहां पे you are given, जैसे we saw the questions in yesterday, the last class, you are given all the adjustments and then we went on identifying AS में क्या है, Ind AS में क्या है, we take the impact. Those type of questions can come. Maybe they'll give you an opening balance sheet. You do the adjustments for Ind AS, arrive at the closing balance sheet, prepare it in Schedule 3 and it's over. So then they are clubbing analysis of financial statements and Ind AS 101. That can also happen. Okay. That can also.
101 सर लिखते समय जो राइटिंग थ्योरी प्रोविजन है वो लिखते वक्त हम मैंडेटरी एक्सेप्शन है या ऑप्शनल एग्जाम्पशन है ये वर्ड्स मेंशन ना करते हुए डायरेक्टली ट्रांजिशन इफेक्ट क्या है वो लिखा तो चलेगा?
You will get 75% of the, you approximately 75% of the marks. Reason being, optional exemption है. It's always beneficial to tell option में क्या है. See, in exams में, it's not only limited to financial reporting. It's related to all your subjects in CA final. Multiple solutions exist for one question. Whether it is tax, whether it is indirect tax, whether it is international tax, whether it is financial reporting, whether it is your audit paper, you will have multiple approaches to a question. A question like how you said right now, it can have optional exemption. Optional exemption raha, so you go in for the optional exemption. Jaise we talked about ESOPs. ESOPs, the second category, option 2, where it is vested but not exercised. So where it is vested but not exercised, we have the option to take the previous gap carrying value. But there is another option of taking the fair value at the initial date and doing the working. So for your calculation, you use the optional exemption by taking the carrying value. But exhibit your knowledge. Please exhibit your knowledge. I am not going to be sitting in front of you to check your paper, right? मैं करूंगा भी नहीं, but that is the problem. Your paper speaks about how prepared you are. ठीक है? That is critical.
पर्टिकुलर एडजस्टमेंट मैंडेटरी एक्सेप्शन का है या एग्जाम्पशन का ये मेंशन करना जरूरी है क्या? मतलब वो अभी कैटेगरी वाइज हमें याद करना पड़ेगा कि एग्जाम्पशन कौन सा है एक्सेप्शन कौन से है, इसलिए
Better. Yes, have to. Most of it is logical, Pooja. Whatever we have seen, we did it in a very logical manner. So why there is a mandatory requirement also we know. Why there is an optional exemption also we know. And what is the exception? That also we are aware of. You remember the logics. Maybe you may not write the exact words ki ye mandatory hai as per the standard and all. But where there is an optional treatment, please mention that this option also is available. But if this option, if the question is calculated using that option, the answer will be different. Or you mention the data is not given to calculate optionally, and therefore we are unable to calculate. Is it okay?
yes sir, clear.
Everybody remember, don't be lazy while writing your answers. Okay. If they ask one question, you give all the options which are available for that question. We have done multiple such scenarios, not directly, but we have seen in the indices that you have studied that multiple approaches exist. Always give an optional ट्रीटमेंट इफ द ऑप्शनल ट्रीटमेंट इज अवेलेबल. समझ लो आप डॉक्टर के पास गए, ओपिनियन 1 आ गया, यू आर गोइंग टू गो फॉर एन ओपिनियन 2 ऑल्सो. तो इन दिस केस यू आर टेलिंग द एग्जामिनर दैट मुझे खुद को ओपिनियन 2 पता है, बट आई एम फॉलोइंग ओपिनियन 1. Then that cannot be challenged. That cannot be challenged. Okay? Yeah. Okay. Anything else?
No, sir.
No? Okay. So see you then tomorrow. We do that one question is a big one. We do that question and then we are done for tomorrow's class. Then we have, I think, on Tuesday, professional ethics. Once that is done, then you have you got your schedule, huh?
Yes, sir.
अच्छा मिल गया ना, ठीक है. So that's it. Yeah, all right. Nothing else from my side. So see you guys on Sunday tomorrow. कल एक बार बैठ के डिस्कस कर लेंगे and then we should be able to close it. Is it okay?
Yes, sir.
Thanks.
Thank you, sir.
Thank you.
Thank you, sir.
Thanks. Session concluded.